Today this is the second hearing on 4 Senate bills and 1 House bill. So the 4 Senate bills, Senate Bill number 900, authored by Senator Pia Cayetano, Senate Bill number 1347, authored by yours truly, Senate Bill number 1364, authored by Senator Estrada, Senate Bill number 1848, authored by Senator Tulfo. So we have 4 senators who filed um, measures on PIFITA, and I won't read the long title of the bill anymore because it's quite taxing. But we mentioned it during the first hearing, and then the House transmitted its own version, and this is House Bill number 4339, authored by Congressman Joey Salceda and the other members of the House of Representatives. So before we continue, let me direct the committee secretary to acknowledge our resource persons for today.
Good morning, Your Honor. For our second public hearing on the PIFITA bills, we have the following resource persons. From the Department of Finance, we have OIC Undersecretary Carlo Fermin S. Adriano and Attorney Yuvimil Nina Asuncion. From the National Tax Research Center, we have Ms. Monica G. Rempilio. From the Bangko Sentral ng Pilipinas, we have Ms. Rosalia C. Astorga and Ms. Christine Marie M. Liao. From the National Economic and Development Authority, we have Assistant Secretary Reynaldo Cancio. From the Securities and Exchange Commission, we have Mr. Vincent John Peñamora. From the Bureau of Treasury, we have Mr. Dominic E. Mariano. From the Insurance Commission, we have Attorney Brian Gale T. Sibuyan. From the Philippine Economic Zone Authority, we have Attorney Jenny June G. Romero and Ms. Cristeta V. Cañete. From the Philippine Amusement and Gaming Corporation, we have Attorney Arnold Ferdinand Salvosa. From the Philippine Charity Sweepstakes Office, we have Mr. Juni E. Kua. From Tax Management Association of the Philippines, we have Attorney Jacqueline U. Villar and Attorney Martin Ignacio Mijares. From the Philippine Cooperative Center, we have Mr. Edwin A. Bustillos. From the Microfinance Council of the Philippines, we have Mr. Alan Robert Sikat and Mr. Gilbert Maramba. From the Philippine Insurers and Reinsurers Association, we have Attorney Eric Recalde, Mr. Michael F. Reliosa, and Mr. Rogelio J. Concepcion. From the Fund Managers Association of the Philippines, we have Attorney Julio Bucoy. From the Rural Bankers Association of the Philippines, we have Mr. Rafael Amparo. From the National Development Company, we have Mr. Antonilo Mauricio. From the Philippine Guarantee Corporation, we have Mr. Alberto E. Pascual. From the Philippine Crop Insurance Corporation, we have Mr. Alan E. Retamar. From the Department of Migrant Workers, we have Assistant Secretary Jerome T. Pampolina. From the Philippine National Railways, we have Mr. Michael Ted R. Macapagal. From the National Housing Authority, we have Ms. Maria Luisa T. Tenco. From the Chamber of Automotive Manufacturers of the Philippines, we have Attorney Romel Gutierrez. From the International Container Terminal Services Incorporated, we have Attorney Benjamin Gorospe. From the Chamber of Thrift Banks, we have Mr. Francisco Dizon. That will be all, Your Honor.
Thank you, Comsec. So today we'll start off with the items that we did not discuss thoroughly during the last hearing, and most of them revolves around the macroeconomic impact of this proposed measure, particularly impact to the revenue collection of our government. And during the last hearing, it was presented to us by the DOF that the proposed measure will impact our revenue collection negatively by about 125.9 billion pesos in the next 5 years. Of course, on the other side of the coin, making it simpler, making it understandable to our constituents and to our taxpayers, and also making it competitive vis-a-vis our neighbors will improve the market size of the financial sector. So meaning, if we simplify our tax rates, harmonize our tax rates, it will improve compliance. It will also improve administration of taxes, and hopefully, with the simplification and making it competitiveness, it will grow the market size of the different financial sector components. For example, the equities market, the insurance market, the pre-need market, and the other market. So the goal here is not only to simplify, of course, simplification is something that we all welcome, but also to grow the market size. No? Because the theory here is if we grow the market size, there are more revenues, and therefore there are more taxes to be collected. And that will offset the negative revenue impact of this measure. So we left it at that. So I don't want to go into, because if you look at the bill, it's all ups and downs of numbers, but we need to look at the macro point of view of the proposed measures. And we gave DOF and NEDA a lot of assignments to do. And I hope after 1 week, you can already present to us, Yusek Adriano, some of those items that we did not discuss thoroughly during the last hearing. And there's also another item that is not in my proposal, but is in the House proposal, and this is to remove the tax exemption for pickup trucks. No? And this is a way to mitigate revenue loss. But as politicians, alam ni Governor Kua to eh. If you give something to our constituents, it's very hard to take it back. No? Diba, Gov? Katakot-takot na justification in order to take it back. And we gave them exemption, and now we're taking it back. No? So we need to justify it very carefully and thoroughly on why we are removing that exemption. No? Because I remember when, I think this was during the 18th Congress, when train was passed, the rationale for giving it exemptions for pickups is because the agriculture sector use the pickups for their own businesses. No? And the agriculture sector is the primary beneficiary of and users of pickups. No? And of course, we all support our agri sector. Therefore, we gave that exemption. So we also want to understand, no? Because I heard last time that that was the intention, but in reality, it's not. No? Meaning some of the pickup trucks are not being used in agri. It's probably being used for something else. And we want to prove that during this hearing. No? So we want to remove the exemption without proving it carefully through these proceedings. All right, so we'll start off, Yusek. We continue, I heard the new Secretary of Finance, Secretary Ralph Recto, that there'll be changes and proposals to this measure. I heard them over the news. Is that going to be pursued? And if yes, what are those changes? If no, then we can just proceed with the discussions on this measure.
Morning, sir. Yes, there will be changes. We're just finalizing the changes right now. We're hoping that we can share the draft DOF bill of the package 4 by this week. So we've been working with the secretary for 2 weeks now with regards to all of the reforms, including this package 4.
I have worked with Secretary Recto on train, on crate, and many other tax measures, and he is an expert in tax proposals. No? So I have full confidence that his proposals will definitely improve the bill. But to that effect, we'll probably, because we are now in the second hearing, so we will probably talk about those proposals in the technical working group, because the plan is after this hearing, we'll enter into a technical working group. And my style in the technical working group is to go through provision by provision. No? So that will be scarring through the bill thoroughly. No? So we can introduce those improvements when we enter into a technical working group. No? So we hope that we can finish our hearing today. So we'll start off first of all, with the impact of the revenue loss to our um, overall fiscal situation, and as well as how will it impact on our medium-term fiscal framework, which was legislated. That serves as a direction on improving our debt to GDP ratio, improving our budget deficit. Hopefully, we can bring it down again to about 2%. So we want to talk about that. No? We want to go macro first before we'll drill down into the specific provisions of the bill. I hope you're ready with that discussion, Yusek Adriano.
Sir, we'll just upload the slide, but we also prepared a presentation. The entire C prepared a presentation
Sige, yeah.
on the comparison of the tax rates.
Yes, we also gave you that assignment
Yes.
to understand understand the competitiveness angle of this bill, because one of the rationale for pushing this bill is to make us competitive, lower down stock transaction taxes, lower down taxes on pre-need and insurance products, even eliminating DST in some of the transaction, all in the name of making us competitive. So we can also, that's also part of the request that we made during the last hearing. So if you're ready to present that, we can start off with that discussion. Go ahead, Ms. Rempilio.
Good morning,
Do you have a
sir.
presentation?
Yeah.
Let me.
We're just waiting to upload the slides.
Okay.
Basta po, tingnan lang. Good morning again, Mr. Chairman. The National Tax Research Center would like to express our gratitude for giving us the opportunity to participate again in the second hearing of Package 4. As stated by Secretary Ralph G. Recto, Package 4 is one of the 5 priority bills being pushed by Department of Finance. Package 4 seeks to encourage growth in the key financial markets by simplifying the tax structure on passive income and on certain financial instruments and other financial products. One of the key measures to be implemented under Package 4 is the reduction of friction cost. However, there is a need to do a balancing act so as not to further deplete the government coffers. As previously discussed during the first Senate hearing, Package 4 aims to redesign the capital market and financial intermediaries taxation to be regionally more competitive. Hence, let me give you an overview of the current profile of the Philippine debt and equity markets and insurance industry vis-a-vis our neighboring countries, and identify how Package 4 can help address the concerns of the industry players. Next slide, please. On debt market, the size of the country's total local currency bond in proportion to the GDP is among the lowest in the region at an average of 37% per quarter for 2005 to 2023, while neighboring economies such as Malaysia, Singapore, and Thailand have larger bond market in relation to their respective annual GDP per quarter, averaging 98%, 80%, and 68% respectively during the same period. the third quarter of 2023, the Philippine bond market remained at around 50% of its GDP, while Malaysia's and Singapore's bond market grew faster than their GDP by 28% and 8% respectively. On the other hand, Indonesia and Vietnam lag behind the Philippines at around 30% and 20% of their GDPs respectively. Next slide, please. On the equity market, the PSE on the average grew by 495% from $40 billion to $236 billion from 2005 to 2023. However, the country's equity market remains behind Singapore, Indonesia, Thailand, and Malaysia, with average equity markets valued at $602 billion, $392 billion, $375 billion, $372 billion respectively during the same period. The Indonesia Stock Exchange has exceeded Thailand's and Singapore's stock exchanges in 2023 to become the largest equity market in ASEAN. Next slide, please. Next slide, okay. In terms of annual addition to the roster of corporations with stocks listed in the stock exchange, for 2023 alone, the Indonesia Stock Exchange was able to list 79 new corporations out of its 903 total listed corporations, followed by the Stock Exchange of Thailand with 14 new listings out of its 840 total listed corporations, and Malaysia with 32 new listings out of its 993 total listed corporations. The PSE only managed to list 13 new corporations in 2023 out of its total 283 listings. Next slide, please. With regard to insurance penetration, based on the data from the Insurance Commission as of September 2023, the insurance penetration in the Philippines remains very low at 1.68%. In 2022, the Philippine insurance industry contributed around 1.73% to the GDP, a decrease from its previous year's share of 1.93%. Over the last 7 years, the insurance industry share to the country's GDP fluctuated, reaching its lowest share in 2019 at 1.55%. Compared to other ASEAN member states, the Philippines has lower insurance penetration rates than Vietnam, Indonesia, Singapore, and Singapore has the highest insurance penetration among the ASEAN member states at almost 9%, at around 9%, I mean. Next slide, please. So how is the Philippines in terms of rates compared with other ASEAN neighbors? For the tax on interest income, half of the ASEAN member countries accept interest income from the imposition of tax. The tax on interest income in the Philippines is higher than the ASEAN average of 8%, 6%, 15%, and 14% for resident individual, resident corporation, non-resident individual, and non-resident corporation respectively. Next slide, please. For the dividends, the Philippines is also higher than the tax rates in other ASEAN member countries. Cambodia, Malaysia, Myanmar, and Singapore do not impose tax on dividends income for their resident individual and corporations. Next slide, please. Same with the tax on royalties earned as passive income. The Philippines' 20% tax on royalties is higher than Indonesia, Myanmar, and Vietnam, which impose 0% to 15% for resident individuals and corporations. Thailand imposes a withholding tax on royalties earned by a resident individual at a progressive personal income tax rates. Next slide, please. As to the tax on shares of stocks, only the Philippines, Indonesia impose a transaction tax of 0.60% and 0.10% respectively on the sale of shares of stock listed in their respective local exchanges. The sale of shares of stock in the local exchange is exempt from tax in Brunei, Laos, Malaysia, Singapore, and Thailand. In Cambodia and Myanmar, such sale is taxed at capital gains tax, while Vietnam subjects the sale of shares of stocks to income tax. Next slide, please. Next slide. As for taxes on life insurance products, the Philippines imposes a 2% tax on life premiums, while Malaysia imposes 6% service tax on premiums for all insurances, excluding medical and Islamic insurance. Thailand imposes a 2.5% tax on interest, service fees, and other fees, while Cambodia, Indonesia, Laos PDR, Myanmar, Singapore, and Vietnam exempt life insurance from VAT or VAT-like imposition. Only the Philippines, Malaysia, Myanmar, and Thailand impose DST or stamp duty on life insurance policies. Myanmar and Thailand tables are in the next slides. Next slide, please. Next slide. Okay. As for taxes on non-life insurance products, the Philippines imposes a 12% VAT on gross premiums collected except for crop insurance, and the 2% tax on premiums of fire, earthquake, and explosion hazard insurance collected by companies. Malaysia imposes a 6% service tax on all premiums, excluding medical and Islamic insurance, while Myanmar imposes a 5% tax on the total amount of premiums of life insurance policies. In Singapore, a 9% goods and services tax is imposed on insurance related to motor, vehicle, personal accident, medical and health, workmen's compensation. Meanwhile, for Thailand, it imposes 7% VAT on premiums paid on the policy. On the other hand, only the Philippines, Indonesia, Malaysia, Myanmar, and Thailand impose DST or stamp tax on non-life insurance policies. Next slide shows the details of Myanmar and Singapore. Okay. Can we move on to the next slide, please? Say and DST. Yeah, okay. As to the DST on financial products, other ASEAN member countries also impose stamp duties on the same financial products as the Philippines, namely on original issue of shares of stock, on sale of shares of stocks. Next slide, please. On bonds, debenture, certificate of stock or indebtedness issued in foreign corporations. Next slide. Next slide. On debt instrument also, there are DST and stamp duties imposed in other countries, ASEAN countries, and on bills of exchange. Okay. So we move on to what the proposals under package 4. In order to solve the issues of the industry players, package 4 will gradually reduce the stock transaction tax from 0.6% to 0.1% and impose the lower stock transaction tax on double-listed domestic corporations rather than the 15% capital gains tax to allow them to expand their sources of capital. The DST on the original issue of shares of stock will likewise be reduced from an equivalent of 1%, it will be lowered to 0.75%. Package 4 will also remove the DST on secondary transfers on unlisted shares of stock. Package 4 will also exempt from tax the interest income and gains from project-specific bonds issued by the government to encourage investment in government bonds that support development plans. Package 4 will also shift the taxation of pre-need, annuities, pension funds, and HMO products to 2% premium tax instead of the 12% VAT to further reduce friction costs on certain insurance products. Package 4 will also impose a lower DST of 20% to 200% on these insurance products. Package 4 will retain the 12% VAT imposed on non-life insurance products as it is more beneficial to industry players, and gradually reduce by 1% the DST on all non-life insurance products from its current 12.5% to 7.5%. That is all, Your Honor. Thank you.
Thank you, Ms. Rempilio. I have a few questions, but I'll limit it to two for now so that the DOF can uh, elaborate some of the requests that we had from the last hearing. First is I'll choose a sector. No, this is the financial industry as a whole, but I'll choose one component of the financial industry, the equities market, where we plan to lower it down to at 0.1% for stock transaction tax. And the other components also, for example, issuance of shares of stock. In your analysis, how much is the tax component to the total cost of issuing shares? Because the argument here is we want to develop our equities market, tama?
Yes, sir.
No, that's the argument. But how much is the tax component to the total cost of issuing shares in the development of the equities market as a whole? Because maybe I don't have the data right now, no? But my argument there, bakit in tax component is not substantial? No? The other costs, such as, for example, brokers' fees, financial fee, all the other fees, no, which are also subject to tax, is bigger. No, so based on your analysis, do you have that? That's one. No? Also on the insurance sector, because the insurance sector is one sector that we want to grow. Personally, I see a lot of potential in the insurance sector, and a lot of our constituents, especially our ordinary constituents, are not insured. No, whether it's pre-need, HMO, a lot of them are uninsured. No, so and you demonstrated earlier that the penetration rate of insurance in our country is at 1.67% compared to 2% in other jurisdictions. So again, what is in terms of taxation, how much of cost, how much of it is a cost when you acquire insurance products for ordinary constituents? Do we have that number? Because we want to break down, if I buy insurance, how much is tax? And how much goes to, let's say, premiums or other fees? Now, do we have that? Because that will also dictate on the next question to DOF, which is a change in habits or the change in behavior. Hopefully, when we make it competitive, there'll be a positive change in behavior, meaning they'll buy more insurance, they'll trade in the stock market more often, things like that. Do we have that right now?
Your Honor, as of the moment, I don't have the exact tax component with regard to the shares of stock, the transaction on sales of stock. But what we have right now is the 0.6% stock transaction tax, as well as the 1% DST on the transfer of shares of stocks. What I heard from industry players is that they are not actually on problematic with regard to the taxes, but more of the legal fees, the legal costs.
That's why we might be knocking on the wrong door and saying, oh, if we lower down taxes, our stock market will become vibrant. And we invited some stakeholders here to, of course, those are involved deeply in this sector. No? So we'll invite them to give their opinion on this. But from the NTRC's point of view, and based on your analysis, no, because you're the research center for taxes, will this change the behavior and create positive? Well, will this create positive behavior and increase the market size?
If we lower the,
If we do all those lowering down and simplification.
I strongly believe that it will attract more investors to participate in the local stock
Yeah.
exchange.
But do you have that breakdown on, for example, transacting in the stock market? How much are fees? How much
Yeah.
are
Yes, sir. For the stock stockbrokers commission, we have the amount of transaction times commission rate plus the 12% VAT. And then we have the clearing fee, that is amount of transaction times 0.0001%. The PSE transaction tax, which is amount of transaction times 0.0005, and the stock transaction tax, which is 0.6%.
How much is that, the stock transaction tax? In terms of percentage, how much is it? Anyways, for well, I was hoping wala
We'll
nang
get
next
back
hearing,
to you.
ano, but can you present to the committee a breakdown of all these different um, um, different financial sectors? Can you demonstrate to us what is the component of this taxes that we are lowering down or we are changing in order to improve and make it competitive? We've demonstrated that, obviously earlier we saw that we're not competitive, no, in many of the different financial sector components. But I want to break it down further. How much is taxes compared to the total cost of, let's say, buying an insurance product, transacting in the equities market, issuing bonds? No? How much is the tax component? I want to break down, and each component will have their own tax rates. For example, legal fees, no, they have their own tax rate doon. No, so let's be precise so that we can see in the total, cost of transacting how much is the tax component.
Yes, sir. We'll get back to you, sir.
Yeah,
My staff are doing the calculation.
Now, if you cannot do it now, just submit to the committee, or we'll have probably another hearing to present that, because I want the people to understand. It's not only lowering down and simplifying. We want to demonstrate that it's improving competitiveness and hopefully improving market behavior, meaning they will buy more insurance, they will be insured, things like this.
Will do.
All right.
Will do, sir.
Yep. Thank you. Thank you for that. I'll go to the DUF, and we'll talk about the negative impact to revenue. No, and of course we want a win-win situation here. No, that's my favorite slogan: win-win situation, in which we will simplify, but we will not have negative revenue impact. No, but that's not the case for this proposal. No, but you know, no, the other side is hopefully we can grow the market size and collect more taxes. So, but let's take it from your presentation that will be losing 125.9 billion pesos. How will it affect the fiscal situation of our country?
Hello, may I request the slide to be shown?
Okay.
Thank you. Sir, next slide, please. So what I will be presenting is basically the whole tax reform measures, and this was approved during the DBCC December 2023. But I would like to note that all of these reforms are still subject to change based on our discussions with our secretary. We will be finalizing all of this by this week. And as you can see here, you have the years and then you have the revenue breakdown. And in total for 2024, it's around 13.4 billion, assuming all of the tax reform bills will be passed or implemented by Q3 2024. And then you have the breakdown until 2028. Next slide, please. Again, I would like to stress these are all subject to change. Now, this one, sir, is the revenues, tax revenue as percent of GDP. So you have 4 lines here. The first one is the MTFF, DBCC as of July 2022. And then you have the BESF 2024, which was approved during the June 2023 meeting. And the emerging one, which is the purple line, that is as of December 2023 DBCC. And we just put there a no scenario if no reform will be implemented. So the latest one is basically the purple line, the emerging revenues as of December 2023. And as you can see, the purple line is significantly lower than the MTFF and the BSF levels. So we expect, given the DBCC December 2023, we expect revenues from 14.8%, it will grow to around 16.4% in 2028. Now, given that no measure will be passed, assuming there will be no tax reform will be passed, in terms of revenue, it will be around, on average, 0.2 percentage points lower compared to the emerging revenue as of December 2023. Next slide, please. This show basically the DOF tax priority measures under its current form as of December 2023 and the BSF 2024 levels. And as you can see in 2024, under the BSF, we were expecting around 120.5 billion pesos. But given the current form as of December 2023 and the status, we expect to only collect around 13.4 billion. And then by 2028, as you can see here, again, it's significantly lower. We expect to collect around 86 billion by 2028, given yung December 2023 approved. Next slide. This one, sir, is the percent deficit to GDP ratio. We provided here two scenarios. First is the as of DBCC 2023, and then we provided here a no measure scenario. And as you can see here, given a no measure scenario, our deficit by 2028 is around 3.2%. And this is higher than our target under the MTFF. Because under the MTFF, our target by 2028 is 3% deficit of GDP. If we will be able to pass all the reforms, we expect that our deficit to GDP ratio by 2028 is around 3%, similar to the target as provided or as outlined in the MTFF. If the PIFITA or package 4 will not be implemented, given that it's a revenue eroding, given the current form and given the negative revenues as explained last meeting, it will increase deficit to GDP ratio by around 0.1%. Sir, that's it, sir. Again, sir, I would like to stress, these are all subject to change. All of this graph are all subject to change.
I'll go back to your first slide, which is slide number 2. So what you're saying, Yusek Adriano, that if we look at the entire proposal, it will yield to positive revenue scenario.
Yes.
So, for example, in 2024, government, assuming all of these measures will be passed, the government will stand to gain 13 billion. Tama ba? 13 billion in additional revenue. Correct. And then for the next 5 years, government will stand to gain about 295 billion pesos. Correct?
Yes, around 290 billion.
290
2024
billion.
to 2020.
Yeah. So we have to look at this not as a single measure, but as a package.
Yes.
That will be pushed forward. Because if you look at this as a single measure, definitely it's gonna.
Definitely, it will impact our targets in terms of as outlined in the MTFF. So we have to take a look at it as a whole package in terms of the tax reforms.
Okay. And then, so we have to look at this as one entire package. Okay. But some of these are new taxes. Single use, premix alcohol, the motor vehicle users tax is an increase. Fiscal regime is an increase.
So for the excise tax on premixed alcohol and the sweetened beverage and junk food, as you can see here, we did not include any incremental revenues
Okay.
because we're
Okay.
expecting that we won't be able to push for these reforms.
Okay.
On the motor vehicle road user tax, yes, it's an increase, but we are, as I mentioned, we are finalizing the DOF version and it will be submitted this
Okay.
year.
So
And
it's
this
so
week.
I won't go into the details of each measure, no, but what DOF is saying that we need to push all of these so that taken as a whole, it will yield to positive revenue collection.
Yes, Mr. Chair, and we will be able to meet our MTFF targets.
Okay. All right. Okay. All right. Okay, so I have a few more questions, no, on the slide, but I'll go back to you later on because we have a lot of guests today, so we need to hear their comments and put on record their opinions on the proposed measure. So we'll start off with I'll start off with the private sector, no, because they've been very gracious with their time, and I know that they also have other things to do later on. Just Okay. We'll start off with TMAP. Um, whose congratulations, Attorney U. Villar, on your assumption as the new president of TMAP. Any comments on the proposed measure on PIFITA?
Good morning, Mr. Chair, and thank you again for inviting us in this second hearing on PIPITA. On the first hearing, we already mentioned about initial comments we collected from our members, which is to retain the dividend income, a tax on dividend income at 10% instead of the proposed 15%. This is to align somehow with the other ASEAN countries, which does not impose tax on dividends, and some countries also give like a lower rate on dividend income. And then as well for the long-term deposits or investments, if we can retain the exemption for 5 years and more investments, so to still attract long-term investments from individuals or depositors. And we also have some comments about for the HMO plan, because in the definition, it was somehow limited to postpaid, or I mean prepaid payments on the HMO plans or the pre-need. So because there are also HMO plans that are they just charge an administrative fee, meaning these are postpaid, whatever the HMO pays ahead, and then they will just charge for an administrative fee. They're just like a revolving fund with them. And it was also mentioned in our position paper. And we also have some comments on the definitions. What can be included and excluded, let's say in the definition of the shares of stock, the shareholders, the CIS of the collective investment securities. We need some clarifications on those technical definitions.
Give us some specific examples on definitions,
All right.
just to put on record, and then the rest we can do it via position paper because I know there are a lot of details. No? But just to put on record and cite one specific example in which you feel that the definition should be expanded or clarified.
Okay. So let me refer to section 22 of the NIRC. Particularly, there's just a comment that say, when using this title, it says change title to code. And here, section 22, paragraph L and M of the NIRC as amended, remove future contracts from the definition of shares of stock and shareholder. And Another thing is we understand that the term derivatives was removed from the definition of shares of stock and shareholder in the previous House bills because derivatives from the technical standpoint may not necessarily have the attributes of an equity security. Futures contracts are also derivatives, hence the same should likewise be excluded from the above definitions. And on Section 22M of the NIRC as amended, remove collective investment schemes or CIS from the definition of shares of stock and shareholder. CIS may either be corporate or contractual. Then retain exemption from DST to boost capital markets. Another thing. Section 22, paragraph T, second sentence of the NIRC as amended, deposit for future subscription to be excluded from the term securities since it is still lodged in a liability account. And then in section 22, paragraph GG of the NIRC as amended, no need to include long-term deposit or investment certificate since tax exemption has already been removed. If we will continue to remove the tax exemption on long-term deposit. So this will also require some updates on section 22, paragraph GG. And on section 22, paragraph MM of the NIRC as amended to confirm that the definition of organized marketplace also include foreign stock exchanges. Yes, and section 22, paragraph OO of the NIRC as amended, the definition of HMO products should also include HMO's administrative services only, enclose ASO plans where member clients entrust to the HMO revolving funds from which the company shall source the medical claims and the HMO service fees and other associated charges, which I also mentioned earlier, not to limit it to a prepaid HMO, but also include this like a postpaid or wherein the HMO charge a separate administrative services. Mm. That's it, Your Honor. Thank you.
Thank you. Thank you. Thank you. Thank you, Attorney Villar. We now call on Mr. Bustillos of the Philippine Cooperative Center.
Thank you. Good morning, Mr. Chair. From the cooperative sector and the cooperative movement, we'd like to extend our heartfelt thanks for the invitation that you have extended. There are several comments, Mr. Chair, that we would like to imply on the 4 bills that were filed, but most notably from the bill filed by Senator Jingoy Estrada. If I may, Mr. Chair.
Yeah, go ahead. If you have several points, just mention the top 3 so
Yes,
that
sir.
we can focus on that, and then the rest we can you can just submit to us a position paper, and then later on when we go into the technical working group, we can also discuss those.
Thank you,
other
Mr. Chair.
details. Go ahead.
Okay. We took cognizance of Senate Bill number 1364 on the proposed inclusion of cooperative banks in the definition of terms. May we respectfully request that the cooperative banks should be removed in the definition, as this will affect the imposition of the PIFITA. Cooperative banks are covered by Articles 95 to 105 of Republic Act 9520 or the Philippine Cooperative Code with their tax treatment under Article 60 and 61 exempting the cooperative banks. Henceforth, we would like to move to delete the cooperative bank in the definition of terms. Second, Mr. Chair, is that as far as the Section 33 and 34 of the Senate Bills 900, your bill, Mr. Chair, as well as Senator Jingo, I would like to include in the section 199 that policies of insurance or annuities made or granted, I would like to include the phrase there, by a cooperative registered with Cooperative Development Authority. So as to emphasize, Mr. Chair, that cooperatives are not among those entities that will be adversely affected by the FIFITA. And lastly, Mr. Chair, of course, those uh, sections that we would like to include uh, in the maintenance of all tax exemption of cooperatives. This is included in all the four Senate bills. We'd like to emphasize that financial intermediaries, credit cooperatives, cooperative banks, health management cooperatives, insurance cooperatives, and all other cooperatives which provide different types of services and are engaged in different types of businesses be exempted in PIFITA because there are also laws covering them, not only in the revenue code, but also in the local government code. And as emphasized by President Ferdinand Marcos Jr. during his last State of the Nation address, that cooperatives are conduit of the government in providing services, not only for its members, but in the communities as well, Mr. Chair. So we will submit again our formal position paper and hope the committee, Mr. Chair, will recognize and consider all those proposals enumerated therein. Thank you, sir.
Thank you, Mr. Bastillos. The exemption that you mentioned earlier, for those products, those are products sold to members, meaning they are exempted when they are sold to members, correct? Or the members are the ones uh, who participate in those products.
You're correct, Mr. Chair. For cooperatives dealing with their members, of course, they are tax exempt. But also, for non-members, Mr. Chair, there are also transactions that are not covered by tax. However, if the cooperative have not reached, if the cooperatives have not reached that 10 million accumulated reserve fund as provided for in Article 61 of the of the Philippine Cooperative Code, Mr. Chair.
For non-members, for example, I'm a cooperative selling to non-members, and if my capitalization has not reached 10 million, the products are exempted.
Sir, I mean the reserve fund of 10 million.
The reserve
Mr.
fund, 10 million. But if you go beyond 10 million, you impose tax already.
For
VAT.
non-members, Mr.
For
Chair.
non-members, only
Yes,
for
Mr. Chair.
non-members. Okay, all right. Okay. Well, my personal view there, because I was a local chief executive, the same with Governor Kua. I have personal experience that cooperatives are a efficient vehicle to address poverty in our locality, and it changes behavior by teaching them how to save and go to cooperatives rather than informal channels to lend, to borrow money, and also to invest, no, in some areas. I think it's a good way to dissuade people from going into yung mga get rich quick scheme. Diba? Maraming mga ano ngayon eh, even now there's so many of those schemes that promises 1,000% return. I think cooperatives is a good way to encourage people to go into safer investment vehicles rather than itong mga ganitong very dangerous offers by unscrupulous individuals. No? So rest assured that at least this representation will make sure that cooperatives will maintain their essence in terms of fighting poverty in our localities. No? So,
Thank you, Mr. Chair, for that recognition and compliment. In fact, Mr. Chair, we have we have seen you a lot in all cooperatives endeavors, including the launching of the PUB modernization, the e-jeepneys, among others, and the National Federation of Transport Cooperatives and the Philippine Cooperative Center. And the National Anti-Poverty Commission, Cooperative Sectoral Council recognizes your answer. recognize your contribution to the cooperative. Thank you, Mr. Chair.
Thank you, Mr. Basilius. Just submit to us the rest of your position paper, and then during the technical working group, we will invite you to participate as well.
We will subscribe, Mr. Chair. Thank you.
We'll also call on Mr. Maramba or Mr. Sikat of the Microfinance Council of the Philippines.
Yes, Mr. Chair, Alan Sikat from the Microfinance Council of the Philippines. So our position is, or our statement will be very quick, Mr. Chair. We appreciate that the House Bill 4339 and the rest of the Senate Bills 900, 1347, and 1848 did not include the repeal of Section 20 insofar as tax on interest income, capital gains, and documentary stamps tax is concerned, of Republic Act 10693, which was approved into a law in 2015. So this is entitled the Microfinance NGOs Act. So we have noted, however, Mr. Chair, that SB number 1364, the version of Senator Estrada, still includes the repeal of Section 20 of the Republic Act 10693 under Section 38, letter W of the Senate bill. So we would like to respectfully express our objection on the inclusion of the repeal of Section 20 of Republic Act 10693 in SB number 1364, because we firmly believe, and you mentioned also a while ago, similar to cooperatives, microfinance NGOs are an effective tool for poverty reduction in the Philippines. So we strongly encourage the Senate to adopt your version, Mr. Chair, and House Bill number 439, which does not include the repeal of Section 20 of Republic Act 10693, Mr. Chair. That's all.
Thank you, Mr. Sikat. Well, we deliberately removed that because I also believe in I also believe that the microfinance industry can be an effective tool to reduce poverty as well. But can you, for the interest of public knowledge, can you describe to the committee some of the microfinance activities in different localities, no? Some of the activities that your member engage in, and how it can help our ordinary constituents, especially in the informal sector, and what products do you offer in order for them to go into the microfinancing industry and also into your to avail of your services?
Thank you, Mr. Chair. So generally, microfinance NGOs provide financial and non-financial services to poor and low-income households, mainly women. So mainly women because back in the days, it was adopted, a methodology was adopted from Bangladesh, the Grameen Bank approach, wherein loans were provided to women micro-entrepreneurs. No? So these are loans, primarily loans that are non-collateralized, and also encourages savings, micro savings in the microfinance methodology. So in the Philippines, microfinance NGOs currently reach around 8 million clients in the Philippines. So they also have what we call compulsory savings, Mr. Chair, meaning part of the loan being provided, they also are forced to save so that they can use that savings when they need it in the future. So aside from these financial services, microinsurance is also provided as a part of the package of financial services, Mr. Chair. And apart from that, it is well known in the Philippines and all over the world that microfinance NGOs in the Philippines also provide non-financial services, meaning health programs, educational programs for the family, welfare programs, death benefits. So these are all in part of that microfinance package, Mr. Chair.
Thank you. Thank you for that. We call on Attorney Eric Recalde of the Philippine Insurers and Reinsurers Association.
Good morning,
Yeah,
Mr.
attorney. I think last time you were going to
Yes.
submit a position paper because you were just invited, I think, about 2 days,
Yes,
2
that
days
was
before the hearing.
that
So-
was for Finex, Mr. Chair. And
that's for
immediately after our hearing, I contacted my insurance clients and informed them that of today's hearing, and that's why I just want to express our gratitude in the invitation. But allow me, Mr. Chair, to to specifically express the position of the property insurers and reinsurers here.
Yes, go ahead, attorney. Go ahead.
We we have noted the presentation of NTRC relative to the very low penetration rate and at least on the cost of reinsurance here, primarily because of the tax component. And in that regard, we welcome the reduction of doc stamps. Although in the existing version, it settles to 7.5%. If the revenue of the government would permit, it will be much better if there's no doc stamps, similar to the other ASEAN countries. But on the VAT, it's also we welcome the position of the DOF and also the NTRC presentation that property insurers should be differentiated from HMOs and pre-need companies whose clients are primarily individuals. As the current draft, all the versions, pre-need companies are proposed to be subject to premium tax. But for property insurers and reinsurers, we remain to be subject to VAT, primarily because we also have corporate clients. And as you can see, property insurers, imagine the buildings, those vessels, these are commercial, and it will be, from perspective of the government, it will still be a good source of revenue for VAT purposes. But from the perspective of the property insurers, okay, and reinsurers, it will be catastrophic for us to be subjected to premium tax because we will be absorbing practically the input VAT that we pay for those who service the risk. Okay, so in that sense, we welcome and we believe that the VAT treatment of property insurers would remain, and the amendment that the shift to premium tax be limited to these HMOs and pension and pre-need plans. But what we want to clarify here is the exemption on the property reinsurers, in particular, the requirement that the exemption is dependent on the fact that the direct writers or the direct insurance companies would pay for that. Under the existing regulations, Mr. Chair, and that's in the VAT regulations, the reinsurance premium, be it property or for life, okay, life is a premium tax, but for property, it's explicit that reinsurance premium is not subject to VAT, primarily because there's no value added service there. We are just co-sharing the risk with the direct insurer, and precisely that's also the requirement of the Insurance Commission. It's a good insurance practice that the risk will be spread as much possible to several entities. However, the insertion and effectively making it more uncertain on our part is the requirement that we need to ascertain that direct reinsurer, the direct writer should have paid the VAT. We suggest the deletion of that clarification and more or less legislate the existing regulation, the VAT regulation, to the effect that reinsurance premium won't be subject to VAT, period. And that's also the same treatment, if I may also make comparison with the premium tax relative to life insurance companies. Because in the life insurance companies, it also covers the concept of reinsurance. And in that, there should be same treatment for life, no premium tax. For property, there should also be no VAT for reinsurance premium. But again, the point here is, and the idea, the certainty and simplicity. The reinsurance companies should not have that burden of ensuring that the direct writers must have paid the VAT. They're just here. They are essentially domestic companies. The government, the BIR in particular, can always ascertain that all the premium would be reflected in the VAT returns of the property insurance. Now, allow me as well to highlight and not captured in the existing bills relative to the withholding tax. I mentioned this, Mr. Chair, last time, consistent um, with the principle that reinsurance premium is mere cost sharing and essentially they're not income. And I note the amendment in section 37 that portion of the premium that is contributed to the reserve fund, the quote unquote earmarked fund to answer for the risk, are tax deductible, therefore not income. Okay. Up to a certain extent that there is an uncertainty at the moment that the reinsurance premium is made subject to the withholding tax of 2%, that leads to a lot of accumulated prepaid taxes for reinsurance companies, such that the very margin, which is essentially just the mere reinsurance commission, the reinsurance commission, let me highlight, there's no problem, it should be subject to withholding tax. There should no problem, it's clear in the regulation, it's subject to VAT. But on the premium itself, reinsurance premium, the cost sharing, that should also not be subject to VAT and by extension to withholding tax. We will submit our position paper in this regard, Mr. Chair, so that to harmonize the treatment and certainty in the tax treatment of the property insurance and reinsurance companies.
Thank you, Attorney. I have actually question on that, on the reinsurance premium, but I'll go to a more relevant question regarding change in behavior. Because one of the goals is to, like you mentioned, is to simplify. Like for example, instead of 12% VAT, we will now change into 2% premium tax, no? For life insurance, pre-need, and all that. How will it improve market reception, and how will it increase market size? No? The goal here, as you listened earlier, is to make it competitive, and hopefully the penetration rates will improve. No, since you are an expert in the insurance industry, or your members are, can you share with us how can this reduction and simplification improve the uptake of insurance in our country?
Okay. Let me just clarify. I'm a corporate and tax practitioner, not so much with the insurance companies, but I can explain how it will increase the penetration rate through the reduction of costs, insurance costs. And let me highlight that this should be true for individuals, just like every one of us here. Okay. Premium tax, it's lower, 2%, compared to VAT, 12%. It's a given. But the difference, though, is that premium tax, it's a cost to the end consumer. It's a passed-on tax, but it cannot be claimed as a credit, assuming there's a turnaround, unlike in case of corporate clients. So there's a reduction, and the mere fact that HMOs, those pension funds, pension companies, and pre-need companies, eventually that will encourage, let's say for private companies, even for their employees, to give more coverage, because even in the existing tax code, Mr. Chair, it's a non-taxable fringe benefit when it's HMOs, hospitalization, or similar treatment. So it will increase. Now, more so if there will be a reduction on doc stamps. I know it's not on the table, but right now, the reduction of doc stamps from 12 to eventually to 7.5, it will bring down the cost, because the doc stamps is a pass-on cost to the end user.
Thank you, Attorney. May we engage your group to help this committee run simulations on how it can increase the market? No? Not during this hearing, but later on through a submission. because your members are the experts in the insurance industry, and I want to personally study on how it can also grow the insurance industry. Um, what you mentioned is a good example on how it can reduce the cost on the part of the consumer. But I want to look at the entire industry and just submit to the committee some studies or simulation on how this can help grow the insurance industry and also the reinsurance industry as well.
Mr. Chair, I will coordinate with the insurance companies, the life
Yeah.
and pre-need.
Okay.
I have also pre-need clients for that. I will coordinate, but right now I represent the property and insurance companies.
Yeah, if you can help us coordinate, no, para the entire insurance, life, non-life, pre-need,
Yes,
no,
sir.
we can look at that. It's a very specialized sector,
Yes, sir.
admittedly, and we want to tap the experience of this fewer members to determine how we can grow the size of the insurance industry as a whole.
Thank you very much.
Thank you,
Mr. Chair.
Attorney. We'll call on Mr. Amparo of the Rural Bankers Association of the Philippines.
Thank you, Mr. Chair. First of all, we'd like to apologize. We were not present during the previous hearing. It coincided with our board meeting. I'd also like to beg the indulgence to submit a position paper to convey our specific points. I'd just like to focus today in the interest of brevity on our principal point. It has to do with the revocation of the favorable treatment of withholding taxes on interest on deposits, deposits and loans, specifically for deposits and loans that are more than 5 years. We believe that this will act as a disincentive to banks granting long-term loans, specifically to the housing and real estate sectors. So this may discourage banks from giving out more loans to housing and real estate, given that the tax treatment, or the difference rather in the tax treatment, is quite significant. For deposits, deposits of more than 5-year maturity are actually exempt from the withholding tax, while on loans, the change would be a net of 4%. We have other points, Mr. Chair, but as I mentioned, in the interest of brevity, I'd just like to put them all in our position paper.
Thank you, Mr. Amparo. And can you describe to us what's the impact of that? Well, the essence to change it to 15% is to make it simple, no? So regardless of the tenor, the maturity, it's simple, no? But the downside there is they will not be encouraged, in theory, to put their investment in long-term maturities. But there are other factors that can encourage them, no? For example, the return, no? So can you describe to us from your expert opinion, how will this impact the industry? What do you see are the complications of having a uniform 15% treatment? Just describe to us from your expert opinion.
Thank you, Mr. Chair. We only have data from, our latest data is 2018, Mr. Chair. We are gleaning it off the BSP Financial Stability Report. In that year, loans with maturities of more than 5 years amounted to almost 2.3 trillion. So if we are looking at the removal of the incentive to grant loans with maturities of more than 5 years, we are looking at the possible reduction of at least that amount. We have to remember also that when banks decide to grant maturities of loans, they are guided by the basic principle that the maturity must match the income stream and the life of the project that they are seeking to finance. This is well enshrined within Bangko Sentral regulations. So the bank's flexibility, whether to grant long-term loans is actually a bit circumscribed. What I'm saying is it might not have much of a choice when when a project's nature rather would warrant the grant of a of a longer term rather.
Thank you for that. Uh, yes, just submit to us a position paper also on your other details. We'll ask BSP later on. No? We have a representative from BSP. We'll ask him later on that note. We also discussed that potential impact to long-term maturities. So we'll inquire from BSP. We'll call on Ms. Attorney Bukoy of Fund Managers Association of the Philippines.
Yes, good morning, Your Honor. Thank you for inviting us here. So, on behalf of the Fund Managers Association of the Philippines, we'd like to share some of our positions. But in general, any reduction in friction costs relating to our capital markets will be a welcome benefit to us. And we believe that any loss of revenue for the government will be more than offset by the increased economic activity and capital flows going into our markets and ultimately into our bigger picture economic system. So, just specific to a point of discussion that you raised earlier, um, our round trip transaction cost in our equity markets will be around 1.2% of the transaction amount, and half of that is the stock transaction tax of 0.6% and the VAT on the broker's fees, while the rest being the broker's commissions and the different charges imposed by our equity exchange. No, so this might not seem like a lot since it's just 1.2%, but it has to be viewed in the context of a continuous trading activity. So every time anyone makes an investment, you're already 1.2% down in terms of the returns you have to make. So you're 1.2% down that you need to recoup in terms of your investment. So uh, for us, the biggest challenge right now in the Philippine markets is the liquidity in our stock exchange. No, most of our peers and both the developed and emerging markets have already recovered from the pandemic declines, but the Philippines has still not fully recovered despite being consensusly regarded as very undervalued market. So one of the biggest challenges there is the liquidity, and this also prevents a lot of the foreign investors and the foreign fund managers from coming in. And a big part of that is the the friction costs associated with it. So any reduction in such taxes will definitely undoubtedly be a welcome benefit to our markets. And overall, this would flow down to a lot of our economic participants. And another point earlier raised was the number of IPOs being conducted in the Philippines. So I also just wanted to highlight what's happening right now is the reverse. Instead of companies raising money and going public, last year several companies have actually delisted from the Philippine Stock Exchange. So one of the main reasons why they delist is they are unable to raise capital in our local markets. So some of them would turn to foreign markets instead, or even raise money from offshore private equity funds. Um, so that's one of the biggest reasons why our markets right now are a very delicate position. So we hope that any reduction and any support given by our government will be uh, helpful to us because everything will benefit with a good and strong capital market. Thank you.
The same question that I posed to the insurance companies. Can you help us simulate how these reductions and also the elimination of some DSTs in relation to stock transactions increase the market size, improve liquidity, encourage more companies to list in the stock market, and improve um, the overall activity of the equities market. This committee wants to see how earlier we were talking about behavioral changes. We want to see how this proposal improve behavioral changes, improve um, the uptake of, for example, the equities market in the Philippines, improve sentiments. So the theory here again, no, is to collect more taxes by increasing the market size. No? Just submit to us to the committee, so we'll be guided and enlightened accordingly. Yeah, thank you for that. We'll call on. We also invited. That's all for the private sector, unless I missed. Ba akong na-miss? Saan si Harold? Um, we also invited the GOCCs to give their comments. In the proposed measures, there are numerous repealing clauses that will repeal special privileges, tax privileges given to GOCC. So we invited them to share their comments to the committee. So we'll invite Mr. Mauricio to of the National Development Company for their comments.
Excuse me, Mr. Chair. There's still one from the private sector.
Which is which group?
ICTSI
Yes, yes.
Port Company.
Yeah, you're at the end of the list.
Yep.
I don't know why they put you at the end of the list, but yes, from the private sector, yes.
Yeah,
So-
my name is Ben Gorospe. I'm from the International Container Terminal Services. It's a listed company. So thank you, Mr. Chair, for inviting us to the Ways and Means Committee hearing. So we have 3 comments on the House bill on package 4 of the PIFITA. The first one is on withholding tax on dividends declared to individuals. We believe that this should be maintained at 10% instead of raising it to 15%, as we firmly believe that this would the increase would be a disincentive to investors, not just to ICTSI, but to companies as a whole. So that's our position regarding that withholding tax on dividends, that it be maintained, dividends to individuals, that it be maintained to 10% instead of increasing it to 15%. The other item, Mr. Chair, is on withholding tax on interest to foreign loans. This has not been addressed in the House bill, but we believe that a reduction from 20 to 15% would be beneficial, perhaps to the banking sector, as well as to private sectors. What's happening right now is that instead of borrowing from local banks, Philippine multinationals, especially if they require a bigger amount of loan, borrow from foreign banks in countries where the Philippines has a double tax treaty and avail of the same 15% withholding tax. So by decreasing the withholding tax on foreign loans, Philippine companies can now borrow locally, and in doing so, there will be loans from local banks and withholding taxes for the government. So that is essentially our position as regards withholding tax on foreign loans, that it be decreased from 20% to 15%. The third item, Mr. Chair, is on documentary stamp taxes. We believe that intercompany loans, especially funding coming from a parent company to its subsidiary, should not be subject to documentary stamp taxes, or the DST should be reduced to a considerable percentage. We do not see any value in imposing DST on intercompany loans, especially a foreign company granting a financial assistance to its subsidiary. So we think that DST on such transactions should be eliminated or reduced considerably. So those are the only 3 items, Mr. Chair.
Thank you, Mr. Grospe, for that. Um, we'll go on to Mr. Mauricio of NDC. Sorry, before we go, we also have one more private sector resource person, Mr. Dizon of Chamber of Thrift Banks.
Good morning, Your Honor. Uh, we have just one basic point, and I think this has been raised also by RBAP, and this is with regards to the proposed tax on long-term deposits. No? Our point basically is that these long-term time deposits are made by people who are, for example, retirees who rely on the income that they will generate from these longer-term deposits. No? So to the extent that it will now be taxed to the rate of 20%, this will mean a significant reduction in their current levels of income. No? So we're talking here not of big depositors who make 5-year time deposits. We're talking of the general public. I would assume there are probably millions of depositors who are depositing 5 years, no, because of the tax-free nature, no, of the deposits. And this helps them a lot in meeting their day-to-day expenses, even for senior citizens, maintenance, medicine, for example. And if it's going to be taxed 20%, there will be, a reduction in their ability to meet their day-to-day expenses, and especially for those who are seniors and retired, their maintenance medicines. That's all, Your Honor. Thank you very much.
So the one of the adverse effects of uh, having a simplified rate for long-term deposits, no? Whether short-term, long-term, now it's going to be at 15, is in effect taxing on long-term deposits. No? And what you're saying, and that long-term deposits are normally being availed by retirees,
Yes, Your Honor. Individuals.
individuals.
Yes, corporations normally place their funds in current accounts. And so they're in a position, because of their revenues, to absorb any interest, any tax on their interest. Whereas individuals are not in that position. And the ones who really put their money in 5-year time deposits are really the older people, the ones who have built up their savings in the hope that the interest that they can earn, which is normally higher than what the savings accounts and are offering, they offer maybe sometimes even less than 1%, no? But for time deposits, you can get as much as 7% tax-free, from the banks. So this is very attractive for those who really deposit, especially for those who are middle-aged and seniors, because then it gives them that added income that they need to meet their expenses, no? So that's really a part of our,
That's
I
a very
guess.
good point, Mr. Dizon. No? I think that's
Mhm.
one area that was not expressed um, thoroughly in the presentation of the proponents. No? It was not explained properly, and also that angle did not come up. But thank you for pointing that out. And I'd like to ask DOF or BSP, do you have any data as to, I don't know if you have this, no, this is complicated, but those, um, how many senior citizens put their money in investment that matures more than 5 years? Do we have that data? I don't know if you gather information by age. Not sure. But just to show how many, this is, of course, this is through Mr. Dizon's experience in the thrift bank industry. But do we have any from BSP or DOF? Those very specific information. If not, then we can just discuss about that later on. No? Because I want to also uh, focus on that, because if our senior citizens or retirees are taking advantage of the long-term deposits, obviously by harmonizing it, they will also be affected, no? Because in effect, we're removing the exemptions. No? So I just want to make sure that we look at that angle very carefully. Thank you for that um, piece of information, Mr. Dizon.
Thank you very much, Your Honor.
Thank you. We'll now call on Mr. Mauricio, finally, of NDC.
Thank you, Your Honor. As regards to NDC, the National Development Company is the oldest government investment company. We are celebrating our 105th year since our foundation in 1919. And when I took over the position last October of 2022, coming from the private sector, financial sector, I immediately saw that there was a disconnect with what NDC was supposed to do in its mandate and how it was enabled to do it. So this is the context of our comments. NDC has a very powerful charter. However, it has been diluted by succeeding laws and succeeding agencies, which is the norm because at the time that NDC was created, government was still small. Now, there is not much of a role of the NDC in terms of large-scale projects, but it still plays a part in gaps that are not being filled by the agencies. However, it is at this point mandated to venture into riskier projects that the private sector will not go into precisely because it's risky, but the government has to go into because it's developmental in nature. So that means that by its very nature of existence, the NDC goes into higher risk projects. However, we are also being required to be profitable as a GOCC. And so that goes against the maxim of high risk, high return, low risk, low return. So what has happened in the past couple of decades before I took over is that we have only had a 2 to 3% return on assets. And for the past 15 months, I've been trying to see how we can be more agile in investments. We do not get, we normally do not get funding from the GAA, Your Honor, but we rely on our own internally generated funds. However, in our projects, we pay all the requisite taxes. That's number one. Number two, as a GOCC, 50% of all our revenue goes back to the national government. So that is something that we are currently trying to address in the board and the management committee level on how we can get a workaround either at the executive level at the office of the president or via EO or via change in our charter. Given that context, Mr. Chair, our comments are regarding the tax exemption of the issuance of bonds for Senate Bill number 900. Okay. It expressly includes our charter, PD 1648, or the revised charter of NDC in the list of laws or provisions that are modified or repealed. Normally, we would object to this. However, the said bill allows for the exemption from the above general rule. Section 32 of the NIRC, as proposed to be amended under S number 900, reads as follows. Section 32, gross income. Letter B, exclusions from gross income. The following items shall not be included in gross income and shall be exempt from taxation under this title. Under miscellaneous items, G, gains from the sale of bonds, debentures, or other certificate of indebtedness. Gains realized from the same or exchange or retirement of bonds, debentures, or other certificate of indebtedness with a maturity of more than 5 years. So coming from the private sector, I don't see the NDC issuing a bond less than 5 years. And then G, interest income from and gains from the sale, transfer, or disposition, project-specific bonds that are issued by the Republic of the Philippines or any of its instrumentalities to finance capital expenditures or programs covered by the Philippine Development Plan or its equivalent and other government programs considered to be of high level priority of the country, provided that the exemption shall be upon the approval by the Secretary of Finance. So effectively, therefore, even if our tax exemption from issuance of bonds has been expressly repealed, it is still allowed under this proviso that the bonds to be issued can be tax exempt if they are aligned with the Philippine Development Plan. As the general manager of the National Development Company, I know that all our projects are aligned with the Philippine Development Plan. So I do not see bond issuance that will not be covered by this. Secondly, the Secretary of Finance is in the board of the NDC. And in fact, the Corporate Affairs Group looks at the financial statements of the NDC, the Corporate Affairs Group of the Department of Finance looks at our financial statements at the board audit committee level before endorsing our financial statements to the board. So the Secretary of Finance already has visibility to our financial status and potential bond issuance. Effectively, therefore, we do not have any objection to this because it will not cover our potential bond issuance. The second one is as regards to the documentary stamp tax. In section 179 of the NIRC, as amended, the stamp tax on all debt instruments. So I will no longer read it, but the point here is that this documentary stamp tax may be shouldered by the investor. However, so even if officially the NDC does not have an objection or the proposed amendment on the DST because it is not going to be paid by NDC upon issuance, we are, however, sympathetic to the potential appetite on our bond issuance because it is the investors who will shoulder the DST. So we are aligned with the sector's comments earlier from the capital markets regarding incentives on the capital markets. So when we do issue our bonds, which we do have plans to do so in the next year, we want to be able to compete with the other countries regarding financial instruments issued in the capital markets. Thank you, Mr. Chair. That is all from the NDC.
Thank you. Thank you. Have NDC issued bonds in the last 10 years?
Yes, we issued the ERAP bonds. I'm not sure if it was
That
10
is-
years ago. I think that was quite some time ago.
A
Yeah.
long time ago. ERAP is 2000.
Sorry, it was in
1999.
2006.
Yeah,
1998 and 2006 were the last issuances.
And 2006.
Yes, yes, Your Honor.
All right.
Yes.
And what's the policy of DOF insofar as bond issuance by GOCCs? Because I understand that there's a centralized process to raise funds rather than individual GOCCs raising funds through.
May I,
go
Mr.
ahead.
Chair,
Go
yeah,
ahead.
before the DOF replies, accordingly, our charter actually, apart from the tax exempt status, we have not been stripped of our powers of sovereign guarantee. So the NDC can issue bonds with an implicit or explicit sovereign guarantee. However, I personally, as the head of the agency, do not see the need for any sovereign guarantee of any bond issuance of NDC, being a 100% owned, government-owned and controlled company. Further, the Secretary of Finance himself sits on our board. So any issuance would definitely merit a statement from the Secretary of Finance. And so we think that this is already a very good control mechanism. So in a roundabout way to answer your question, Mr. Chair, we will still have to get the imprimatur of the Department of Finance when we do issue bonds. Thank you.
Thank you for that. Can you have any answer as to the policy on GOCCs issuing bonds?
Sir, our policy is any interest income gains from the sale, transfer, or disposition of project, specific bonds that are issued by the GOCCs, as long as it's related to the PDP or its equivalent in other government programs considered to be high-level priority of the country, are excluded from from the gross income.
Yeah, but that's the general that's applicable to all GOCCs. As long as basically what you're saying, as long as it's in line with the PDP, the Philippine Development Plan, you're exempted.
Yes. Yes,
But
sir.
meaning GOCCs can go out to the market and issue bonds. They're allowed as long as it's aligned with the PDP. There's no prohibition.
Yes, sir.
Okay, all right. Because I understand before that uh, that the DOF encourages um, the GAA as a source of funds rather than individual GOCCs going out to the market and raising their own bonds. In fact, I haven't come across in the last many years GOCCs issuing their own bonds.
Sir, but clarification, according to the BTR, so long as their charters allow for them to issue bonds, they are allowed to.
Yeah. Okay, all right. But the general policy is they can. Okay, okay. All right, let me call on PCSO. We're here represented by their chairman and former governor of Quirino, Chairman Juni Kua.
Thank you, Mr. Chairman. It is our pleasure to appear before this August committee, a very important committee of our legislature. We are here, I'm here, supported by our staff from the management to express our support for Senate Bill 900 and the proposal of the Department of Finance called PIFITA, which in effect will reduce the documentary stamp tax that we are paying from 20 to 10%, as well as the tax on winning, which is also being proposed to be reduced from 20 to 10%. Certainly, this proposed legislation will improve our capability to execute our mandate, especially with respect to our medical assistance program, to our program on PTV or Patient Transport Vehicle Donation Program, our institutional partnership program, and many other activities related to charities. We have submitted our position paper, Mr. Chairman, explaining in detail our views on it. And if the chair wishes, our staff are also prepared to make a presentation if it's still necessary. So thank you so much, Mr. Chairman.
Thank you, Chairman Kua, for that. We're also joined by PAGCOR. Any comments from PAGCOR, represented by Attorney Salvosa?
Good morning, Mr. Chair. And we would like to thank the committee for this opportunity to participate in the discussions. Actually, this is the first time that we were notified of the pending proposals. We've looked at, we've done some work through the weekend, and we have already some observations similar to what was earlier mentioned regarding the intercorporate loans and the tax on distribution of dividends to individuals. This pertains to our licenses. As you know, Mr. Chair, the big developments such as integrated resorts Some of them would have foreign parent companies or affiliates that would extend financial help in the development cost, especially, for example, the $1 billion requirement for the development of integrated resorts. And some of them would also have individual stock shareholders. So in the distribution of the dividends to the stockholders, that would be maybe of interest to them. We've also made some benchmarking on the tax on winnings, on casino winnings. And we will just uh, put our comparison in our position paper. So we would like to ask the committee for a time to be able to submit our position paper. Thank you, Mr. Chair.
Thank you, Attorney. I want to ask PAGCOR and PCSO, no, jointly, because there are state-owned game of chance implementers. The proposal for in the House version is to reduce it gradually to 15% from 20% on tax on winnings. Attorney Salvosa mentioned earlier that they'll submit to us a comparison. But do you have it right now, just off top, no? Because I want to insert that into the records in our discussion so that we'll understand other jurisdictions are doing this, other areas are doing this, and the Philippines vis-a-vis or compared to the Philippines. No, anyone from PAGCOR or PCSO can share with us?
Yes, Mr.
Yeah, go ahead, Mr. Attorney
Mr.
Salvador.
Chair. Our nearest competitor in Asia, Singapore and Macau, in terms of winning, casino winnings, do not impose any tax. They treat casino winnings as windfall and not as income. Now, there are jurisdictions, such as the United States, that impose tax on casino winnings, but the treatment is part of individual income tax instead of our treatment as final tax on the winnings. Now, I think we can have a resource person that is familiar with the process in the US. And based on our research, the treatment, well, the imposition of the tax on winnings, casino winnings in the United States is very tedious. In fact, it's possibly the compliance work, the cost of compliance outweigh the collection. Because, for example, in 2019, although the collection of the IRS for individual income tax is around 1.9 trillion, the possible collection for casino winnings is just $1.9 billion. So it's just less than 1/10 of 1%. But the effort that the casinos put to it to document the winnings, to document the losses, outweigh, I think, the collection or the and then there are also some jurisdictions that tax only casino winnings if it is or casino activities of the individual is pursued as a business, meaning that they are professional gamblers. So there are parameters to determine whether a person is a professional gambler. That's why he or she makes the casino as a source of income. Kaya nga po nagiging taxable siya either as a business or a tax on individual. So far, Your Honor, that is what we have. And most of the jurisdictions that we've looked at exempt casino winnings from taxation. Thank you, Mr. Chair.
Meron bang umaamin na ang negosyo mo magsugal? Parang
Actually, it's really a weird provision dun sa mga jurisdiction na yun, Your Honor. But apparently they were able to establish some parameters like if the person devotes a lot of time going to the casino, more than 6 months in total. I think that was one parameter.
Yeah, but I think that's from an enforcement standpoint, medyo mahirap yata i-enforce yun. No?
Yes, Your Honor. That's our observation in the US system.
Okay, well, that's an interesting trivia. And then you also mentioned earlier, Attorney, that in some jurisdiction they don't consider winnings as income. No?
Yes, Mr. Chair.
So can you elaborate further on that concept?
For example, in Singapore, the tax authority of Singapore has issued a position that these are windfall.
Okay.
They don't consider them as income.
And therefore, if it's a windfall,
They don't tax
they
it,
don't
Mr.
tax
Chair.
it also.
Yes, Mr.
All
Chair.
right. Okay. PCSO, any comments?
Mr. Chairman, the proposal actually is a reduction from 20 directly to 10% for both the documentary stamp tax as well as the winnings. Yung pong mga tumataya kasi sa loto, Mr. Chairman, karamihan ay mahihirap. Yung mga konting natira sa araw-araw, yun ang pinantataya. So we feel that the winners are mostly people who are needy, and therefore baka pwedeng ibaba yung tax on winnings. Now, with respect to the details on how much would the reduction of the documentary stamp tax impact on our ability to respond to our mandate to the demands on our agency, may I seek recognition for Attorney Kat Contacto, who can provide us some details.
Yeah, go ahead, Attorney Contacto.
Thank you, Senator Gatchalian. If I may add lang po to the chairman's point, the reduction po of the taxes on the winnings would also improve the attractiveness po of our jackpot prizes. So malaki, so as chairman po correctly pointed out, most of our bettors po talaga yung mga mahihirap. So malaking bagay po talaga if instead of a 20% tax on their winnings, at ma-reduce po siya to 10%. Going naman po doon sa impact ng 10% reduction namin ng DST, based on the figures po that we have, of our total charity fund po last year, amounting to 18 billion 344,923,569 and 60 pesos. Ang total po na napunta for documentary stamp tax amounted to 12 billion 291,200 291,205,491.17, which is about 67.60% po of our total charity fund. Ang naiwan lang po for our medical access programs, which is yung mga pang-hospitalization po that we give, nasa 2,211,365 831.90 pesos po or 11.67%. Added to that din po kasi kinukuha rin po sa charity funds yung binibigay po namin na contributions for the mandatory expenses that we have under the law. Currently, we have 11 po na binigyan namin, which total 2.6 billion inclusive po of what we gave to universal healthcare. So as far po as reducing our 10%, this will greatly help us po in providing more medical access to our needy countrymen. Kasi po, based din po sa projection namin po for 2024, based on our forecasted charity fund expenses, 14 billion ang projected po namin na mapupunta po for documentary stamp tax, with the medical access program being given just 1.68 billion po. If makukuha po yung slide that we prepared po a forecast then of our 2024 charity fund expenses with 20% DST. So yun po yung na-mention ko na figures. However, if the DST po will be successfully reduced to 10%, we will have 4.9 billion po for our medical access program kung magagrant po ito. So we appeal po to the Senate to help us with this one because charity po ang reason for being na PCSO, and our income is practically the lifeblood that helps us po in performing our mandate. Thank you po.
So right now, PCSO is the one absorbing the DST.
Yes po, sir. We tried po, absorbing as far as our charity po is concerned. Initially po, PCSO tried to pass on to the bettors the impact of the DST. However, we saw a decline po in the ticket sales because the bettors are very price sensitive. So, eventually, ang ginawa po ni PCSO, unti-unti po tinanggal yung pagpasa sa bettors nung DST. Eventually, yung agency po ang sumalo just to keep the attractiveness po ng presyo ng ticket.
And what you're saying is, since the agency is the one absorbing it, it's now eating up in your
Charity fund po. Yes po.
of which it takes up about 60% of your charity fund. Tama
Yes
ba?
po. More or less
Okay,
po, mga ganun po.
Oo. All right, sige. And do you have any, I don't know, if you have any study, or just submit to us that you mentioned that experience wherein you passed it on and it decreased sales, no? So we want to look at the sensitivity, the price sensitivity of our bettors.
Yes po.
I would assume if you're betting, you're not price sensitive. You're looking at you're looking at the price, diba? If it's lalo na PCSO, if you're looking at magkano ba jackpot ngayon? 600 million?
Tapos na po yun,
Tapos
Senator.
na. Typically, diba 600, 700, nababasa ko ganun eh.
No,
Hindi ako bumipili ng loto.
Opo. Actually po, totoo, we are jackpot driven. However, that was true for 2018 when we initially started to pass on to the bettors yung cost ng ticket. However, as soon as the jackpot was hit noong 2019, doon na po siya bumaba. So we submitted that po in our position paper in 2022, but we will resubmit po for
My
the committee.
initial thoughts is normally people who buy, again, I don't have the data, but these are all my personal thoughts. When you buy lotto tickets, the additional 20%, if ever it will be passed on, is negligible compared to the size of the price or the size of the jackpot. No? So, in other words, I'm looking at diba kasi ano parang investment to, no? I'll buy X amount of tickets, but I'm looking at the price, no? So the added incremental 20% should be negligible, no? But what you're saying, it's not, correct?
Yes po.
So we want to see that that simulation wherein buyers of tickets are actually price sensitive to a tune of 20% additional cost to their tickets. No? So we want to understand that because what we're asking is a reduction. No?
Yes po.
And as you have heard earlier, as we stand, this has negative revenue impact already. So another reduction will obviously erode the revenue potential of this bill. No? So just submit to us that simulation and we'll study it carefully.
Yes po. Thank you po, Chairman.
Call on Mr. Pascual of the Field Guarantee Corporation.
Thank you, Mr. Chair. The Philippine Guarantee Corporation would like to thank the Committee on Ways and Means for allowing us to present our position paper on the proposed Senate Bill 1347, authored by the Honorable Senator. The Home Guarantee Corporation is now known as the Philippine Guarantee Corporation by virtue of Executive Order number 58 issued in 2019. Home Guarantee Corporation Act of 2000, Section 5 and 19, Republic Act 8763, provide the tax exemption of interest yields earned accumulated on mortgage debentures, bonds, notes, mortgage and asset-backed securities, interest under a lease and other credit instruments, whether issued by the corporation or covered by the guarantee in favor of natural or juridical persons. However, Section 19 also includes interest income derived from housing mortgages and other housing credit facilities of banks and financial institutions that are covered or guaranteed by the Philippine Guarantee Corporation, which are considered regular or active revenues of the banks and financial institutions. So we'd like to request clarification, Mr. Chair, that the income earned by lenders or private banks uh, are considered as active income and not as passive income. The purpose of Home Guarantee Act of 2000 or Republic Act 8763 is to encourage banks to lend to the low-cost housing and socialized housing sectors. That's why there were incentives given to private banks because the government cannot afford to provide all the funds for the low-cost and socialized housing sectors. The retention of the tax exemption on the housing loans of private financial institutions that are covered by the Guarantee of Philippine Guarantee is earnestly requested in view of the following reasons. The tax incentive provided by the government to private funders is intended to increase lending to low-income families. Government funds budget is not sufficient to fund housing backlog of 6.2 million houses without private sector funds. Effectively, Mr. Chair, we are supporting the BOR PH program of the DSUD or Department of Housing and Urban Development. Without the tax incentive, private funders would rather allocate funds for higher priced housing loans with higher profits and lower credit risk. The government will benefit 5.27 times from additional taxes that will be generated for every peso of organ tax from the incentives due to the multiplier effect brought about by the construction activities involving low-cost and socialized housing projects. In our last computation, Mr. Chair, the foregone taxes is about 1.3 billion. That's a figure in 2021. The income of the government because of the multiplier effect, so it's more than 6 billion. So effectively, the government earns more by providing incentives to private lenders to lend to low-cost and socialized housing sectors. In this regard, we are proposing for the amendment of Senate Bill 1347 and also I think the equivalent or the reference bill of House Bill number 4339, where we were not consulted on that and we were not able to submit our position paper. That the repealing clause encompasses both the active and passive income. So the passive income refers to bonds issued by Bill Guarantee or by the corporation. The active income are the interest income earned by private lending institutions from housing loans that they grant and guaranteed by Philippine Guarantee, Mr. Chair. That is the only comment of Philippine Guarantee Corporation, Mr. Chair.
Thank you for that. We call on Mr. Retamar of the Philippine Crop Insurance Corporation. Ba siya? Pwede. Wala. We'll call on other. Any comments? Mr. Retamar.
As far as PCIC concerned, we have no comment. We fully support the bill, sir.
Okay. You're from the Philippine Crop
Philippine
Insurance.
Crop Insurance
Okay,
Corporation.
thank you. We call on Mr. Michael Ted Macapagal of the Philippine National Railways. Any comments?
Yes, Mr. Chair, good afternoon. And thank you for inviting us to this committee hearing. Well, a few things. We're going to submit our position paper as we were just informed very recently of the tax incentive issue as it relates to the Philippine National Railways. But Mr. Chair, with the indulgence of the committee, we'd like to request for the committee to revisit and review the tax incentive provision. Basically, the Philippine National Railways currently provides or is one of the lowest fare in the entire transport industry. in terms of distance, even lower than tricycles and jeepneys, no? So it will have a negative impact on the service that we provide. And also, being the lowest, you can understand the passengers are mostly the poorest of the poor, no? I think it's pegged at 15 pesos to 150 pesos yung mga bago namin, and we're building the country's most advanced railway system in the north to Metro Manila. However, we're migrating our current operation to the south in Albay, Lucena, and basically the entire Bicol provinces. So marami ho doon na Mr. Chair would be negatively impacted, ano, if the tax incentive will be taken out, uh, because operations will be adversely affected. And we also hate to increase our fares. Yun lang yung available mode in this heavily populated areas. Uh, we will submit our completed position paper to the honorable chair and to the members of your committee. And we will be upon your instructions, we will be participating in discussions moving forward. Thank you, sir.
I'm looking at the exact repealing clause in your charter, and it will repeal tax exemption on interest income, dividends, and capital gains. And then what you're saying is this will have an adverse impact to the fares being charged, no, to our consumers. So how do we, first of all, by how much? And then how does this exemption help in the lowering down of the rates being charged to consumer, to the riding public?
If we lose our incentives, yung operations namin will suffer. Number one. Number two, we may have to pass on, some of this cost to the riding public, which, you and I both know we would rather not do, no? Because like I said, marami po yung mga kawawa, especially in the southern portion of the rails, no? Uh, that's why we beg your indulgence to review and revisit, no, yung provisions as it relates to the Philippine National Railways.
To our GOCCs who are here, no, of course, we don't want this unintended consequence of increasing fares or passing it on to our consumers. Can you help when you submit your position paper? Can you also include the simulation? Like for example, I'm trying to link interest income, dividends, and capital gains to consumer fares, to commuter fares. So in your position paper later on, like for example, the exemption yielded to, let's say, X amount of million pesos saved. No, exemption is so saved. No? So how is it passed on to our consumers? No? And conversely, if we now remove that exemption, that will be passed on. No?
Do that, Your Honor. We will provide you with a detailed position paper, which will also have all the analysis included.
All right. Thank you for that. Next is Mr. Tenko of NHA, National Housing Authority. NHA here? Yeah, go ahead, sir.
Good morning, Mr. Chair. In behalf of NHA, uh, the NHA supports the overall objectives of the House Bill 4339. We believe streamlining and updating the NIRC is crucial for promoting fiscal responsibility and economic growth. However, we have reservations regarding Section 66, letter O, which proposing repealing the NHA's tax exemption on documentary stamp tax set forth under Section 19 and 25 of RA 7279. And this exemption plays a vital role in enabling the NHA to fulfill its mandate of providing affordable, decent, and livable housing for underprivileged. Our concern stems from the following reason. The NHA beneficiaries under the program are the informal sector of the community, and thus NHA does not earn pecuniary benefit advantage from transactions arising from the said program. Requiring NHA to pay documentary stamp tax for documents or contracts executed by in favor of NHA would entail additional costs for NHA in implementing a program for the benefit of the less fortunate citizens. This may also entail additional burden on the part of the NHA beneficiaries should the cost be shouldered by them, or if it will have to be resourced from the GAA of NHA, which in effect will reduce the number of planned housing units for its projects. In view of the foregoing, it is respectfully submitted that NHA should remain exempt and not required to pay documentary stamp tax insofar RA 7279 is concerned. Thank you, Mr.
Thank you, Ms. Luisa. And of course, I personally also, when I was a mayor, had a lot of encounters with NHA. I know that it serves our marginalized and informal sector who who is dreaming of acquiring their own homes and their own shelters. And by removing the exemption, what NHA is saying is this will be passed on, no? Or either absorbed by NHA through the GAA, in which the taxpayers will also pay for that. No? So the same question, if we remove this exemption, how much will it impact the cost of housing as well as the fees being paid by your beneficiaries?
Simple example, sir. For a unit cost 650,000. If it will be charged with 150 per 200 pesos, sir, it will cost 4,800 plus. Yes, sir.
4,800 plus per beneficiary.
Yes, sir.
Of course, for the
For 650,000 cost of housing units for horizontal.
of course, for beneficiary, an additional 4,800 is
Yes.
still
Burden by them.
quite significant for them. No? So just submit to us that. Those are the simulations that we want to see, actual numbers, actual simulations, and actual costs so that we can study it very carefully. And your prayer is to retain the exemption so that it will not be passed on. No? If ever it's not passed on, it will be passed on to the taxpayers.
Sir,
Correct.
yes, also, it will also reduce the number of units planned, sir, when it is charged through the GAA, sir. So-
And do you have that amount? For example, it's passed on to the GAA. How much will that
We'll
cost?
submit na lang,
Yeah,
sir.
just submit to us so that we'll understand also.
Yes, sir.
All right, so that's the last from the GOCC. Any other? Did we call all GOCCs? PEZA.
We have
Yeah,
PEZA.
PEZA.
Good morning, Mr. Chair, and thank you. In behalf of our Director General, Teraso Panga, he cannot make it because he is attending to some Malaysian investors, Mr. Chair. We have already submitted our comment where we raised some points there, but the most important point or provision we want to emphasize here is the removal of the exemption of our RBEs from the payment of the branch profit remittance tax. And during the last hearing, we mentioned that the exemption from payment of the branch profit remittance tax is among the privileges and incentives enjoyed now by our RBEs operating within the PEZA eco zones, while following the principle of the separate customs territory. When our RBEs decided to bring their investments in the Philippines, particularly in PEZA, we already mentioned to them that they have this incentive to be exempt from this branch profit remittance tax. And Mr. Chair, to withdraw now this incentive, it is in our humble opinion that it is ill-timed, considering that our RBEs are still reeling from the effects of the confusing and erroneous implementation of the CREATE Act. So, Mr. Chair, we propose that the exemption of our RBEs from this branch profit remittance tax will still be maintained. As our Director General always say, recognizing the unique feature of eco zones as separate customs territories most crucial to PEZA's attraction and facilitation of incentives of investments. And any attempt to remove these unique incentives and features will surely impact on PEZA as an investment promotion agency and the country's competitiveness as the preferred investment destination. In today's hearing, Mr. Chair, you asked us to submit a list of those companies that are registered with PEZA as branch office that may be affected by this removal or deletion of this exemption from payment of the branch profit remittance tax. And we already have submitted, Your Honor, and we have at least 157 companies. But we have to emphasize that these are mostly the big companies, Mr. Chair. We have the likes of BE Aerospace, we have Dyson, we have JP Morgan, Wukong Group of companies. As to the data, Mr. Chair, on the amount of profit that they remitted, we observed that these companies, big companies, they do not remit the profit to their head office yearly. But when they do, when they are ordered or requested by the head office, we see probably that this is very of sizable amount. And imposing this 15% branch remittance tax would really be a disincentive to our RBEs. That is all, Mr. Chair.
Attorney, when did this start? This incentive, because apparently PEZA is the only IPA who is exempted from this 15% branch profit remittance tax. No? PEZA is given a special treatment on this particular tax, this particular tax. But when did this start?
I believe, Mr. Chair, PEZA it became effective PEZA by 1995 with the passage of the RA 7916, 1995. So probably when this NIRC provision, when it was implemented by 1998, probably we made the necessary representation. That's the reason.
1998.
Yes, sir.
And then how many locators are now enjoying this exemption?
Per our list, Mr. Chair, we have 157 companies.
157.
But these are the big ones in PEZA, sir.
Okay, 157 companies. And how much are they in terms of incentives? How much is the total exemption? Do you have that in terms of amounts?
We don't have that amount as of the moment,
Okay,
Mr. Chair.
just submit to us in your position paper later on how much
Yes,
the total. The more details, the better.
Yes, sir.
And well, one of the when I went to PEZA and met with your locators, one of the things that I picked up is they were discouraged they were discouraged when we changed the taxation regime through the CREATE law. No?
Yes, sir.
A lot of them accepted it, but of course accepted it with pain in their hearts, and a lot of them are still hoping that the VAT exemption and zero rating will be maintained throughout their presence here, as long as they're exporters. And one of the messages that I got is the changing of tax regimes in the middle of their operation. So this is again can be another flashpoint with our investors because again we're changing the tax regime in the middle of their operations here in the Philippines, and this is one of their gripes when we met with them. Um, I don't believe in changing the 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 situation or changing the playing field in the middle of the game. No? I don't believe in changing the rules and changing the conditions in the middle of the game because that will really distort a lot of their um, that would distort their operations, their business model, as well as their um, um, recovery of their investments. No? So we will study this very carefully, and it's good that I went there to PEZA personally to talk to your locators. We'll study this very carefully, and through your position paper, will just give us more details. No? And we don't want any more. Um, we don't want a situation where investors will view us as unstable and inconsistent in terms of offering incentives. No? Once we offer it, we have to honor it until the end of their contract or until the end of their life here in the Philippines. No? So we'll study this very carefully. All right. Thank you, Attorney.
Thank you, Mr. Chair, and we most appreciate the Mr. Chair's comments. Yes,
All right.
sir.
Thank you. Any more from GOCC?
Yes, Mr.
Yeah,
Chair.
go ahead.
I am Noel Fernandez from the Laguna Lake Development
Okay,
Authority.
go ahead.
Yes, Mr. Chair. Um, First, we would like to thanks the committee for inviting us to this hearing. With on the part of the Laguna Lake Development Authority, we are still on the process of finalizing our stand on the matter, Mr. Chair, specifically regarding the repeal of the Section 12 regarding exemption from interest income, documentary stamp tax. Once finalized, Mr. Chair, we will just submit our position paper to this committee.
All right. Thank you.
Thank
you. There's another private sector representative here that is very important, and this is CAMPI, the Chamber of Automotive Manufacturers of the Philippines, and this is connected to the repeal of the tax exemption to pickup trucks. No? Where's CAMPI? There. Di ba, yeah. Were you the one who for the thrift banks?
No,
Okay.
no, Mr. Chair.
Iba, okay. Magkatabi
He
kasi kayo, so I
already-
got confused. Sorry.
He already
Okay.
left.
All right. Yeah. So, Attorney Gutierrez, go ahead po.
Thank you, Mr. Chair. Good afternoon. If it is hard to take back, it is harder to give back. We are also glad to hear no less than the chairman saying about our dislike for inconsistent policies and changing the rules in mid-game. This is precisely what is happening as far as excise tax on pickup is concerned. In fact, the challenges in the auto industry are basically those things: inconsistent government policies and changing the rules in mid-game. We have experienced many changes that are detrimental to the auto industry. Mr. Chair, CAMPI submitted the requested information on pickup sales, selling price by brand, make, model, by variant for the period covered 2017 up to last year. Allow me, Mr. Chair, to read our statement on this matter. First, I'd like to thank the committee for the opportunity to speak in today's public hearing. The proposed measure includes a provision that removes the exemption from excise tax of pickup trucks granted under the Train Act. CAMPI respectfully submits the following information on pickups. Number one, pickup trucks support business and entrepreneurs. Pickup trucks are primarily designed for utilitarian purposes and suitable as small business vehicles. In this sense, pickup trucks can be considered as business tools that help small businesses, entrepreneurs thrive. As a business tool, it is important to keep acquisition costs at reasonable levels. Based on Campis members' data, approximately 40% of pickup buyers, owners say these vehicles are used for business work purposes, including mixed use. The most common usage is for transporting loads to and from market, customers, factories, and job sites. Number two, pickup trucks are hauling, carrying cargo. Its passenger capacity only adds to its utility, but does not take away or diminish its cargo carrying function. Under Philippine national standards, number blah, 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 pickup trucks are classified under N1 category, which refers to vehicles used for carriage of goods and having a maximum mass not exceeding 3.5 tons. Number three, this is the last, Mr. Chair. Pickup trucks are an important source of industry sales. The industry is grateful for the exemption granted under the train, which has allowed the pickup segment to grow. This has supported the industry's recovery after a 40% decline in sales at the peak of COVID pandemic. In 2023, pickup trucks accounted for approximately 20% of commercial vehicles and 16% of total industry sales. Pickup sales have helped push the auto market's full recovery in 2023. If the exemption is removed, we foresee volume loss in the short run since other vehicle types are not very close substitutes to pickup trucks. We are concerned that the industry will lose its growth momentum with potential impact on the automotive value chain. Thank you very much, Mr. Chair.
Thank you, Attorney Gutierrez. Attorney, there's a, I hope you understand, no? The concept here is for the pickup trucks to cushion the impact of that revenue loss, no? That's why actually in my version, we didn't include pickup trucks because we just concentrated on passive income, no? The financial intermediaries sector. Pickup trucks is actually out of place in this discussion if you look at the entire room. But I understand where the proposal is coming from. I understand why the House included it, is to cushion the revenue loss from the simplification of passive income and the others. Now, the allegation here, and I hope you have some data to help us, no? Understand, is that pickup trucks are not solely being used for agriculture, for businesses. I remember, and I'm trying to get the transcripts during our debates on train, that the argument for the exemption is for agriculture, no? For specifically agriculture. I remember that very clearly. I was a senator already. But I want to understand whether that still holds true post-train implementation. And if you can show us some numbers, some data that indeed, no, agriculture sector are the primary buyers of pickup trucks in our country.
Thank you, Mr. Chair. Allow me to give some tentative figures for now. The usage is, well, for special use, that would include farming, towing, transporting of loads and cargos. It's about 20%. For personal use, about 50%. And 20+% for other leisure. People plus cargo. So more or less, Mr. Chair, about 50% really goes to farming, towing, and transporting of loads and goods.
50% goes to farming.
And other mixed use, Mr. Chair, people plus cargo.
Okay, and the other 50%?
That's really for personal transport.
Personal
without
transport.
the goods, yes.
Okay. And do you also have data? You mentioned earlier that 20% of all vehicles in our country are pickup trucks. Is that correct?
That's correct, Mr. Chair.
And then do you have information whether the pickup trucks being sold in the Philippines are manufactured here in the Philippines?
They are all imported, Mr. Chair.
Okay, so they're not assembled.
They are not assembled.
Okay, because my chain of thought there is, it's good that if ever they are being assembled, either fully assembled or partially assembled, because you also have an employment side, no, to look at, no. I'm also very sensitive to loss of employment, no. But this particular case, it's imported, no. Yeah.
Mr. Chair, for the single cab, we have local suppliers who could support or make the deck, the cabin chassis type. So we still, there's that single cab that could cater to small businesses in terms of providing means by putting deck at the back of that single cab. That also constitutes a large number of the pickup trucks segment.
Then, do you know how many companies are selling pickup trucks here in the Philippines?
Yes, Mr. Chair. Of course, Toyota, the number one company. Ford, the Ranger. Toyota, of course, is the Hilux. Ford is the Ranger. Mazda, Mitsubishi, and Isuzu. We also have Nissan and Photon. Photon actually is locally manufactured vehicles. But although, unfortunately, Mr. Chair, we don't have the figure of Photon at this time. Thank you.
Thank you. And then the 50-50 ratio you mentioned, the farming and the personal, how much in terms of absolute value, how many vehicles are we talking about?
Last year, we sold 73,957. And this is actually 50% or 100% higher than the pre-exemption period. Last 2017, before the train law, we sold around 34,686 pickup trucks.
Before the train law, you sold 34,000.
Yes.
And then after the train law, it
Yeah.
increased to about 73,000.
Yes. Last year, it was 73,957.
And do you have any simulation for, I would assume if we reimpose the excise tax, volume will go down. That's the assumption.
Yes, Mr. Chair. On the reverse, when exemption was given, there was an increase of 100%.
Yeah.
So we saw the same, we see the same trend. This will actually add 20% to the selling price of the vehicle pickups in case exemption is lifted.
Okay. All right. Thank you, Attorney. Just submit to us some computations in regards to the reduction in volume, some simulation. For example, if you add 20%, then consumers will not be enticed to buy pickup trucks, and therefore it will go down. Simulation like that can help us study this proposal carefully.
Will do, Mr.
Thank
Chair.
you. Thank you.
Thank you.
And I'd like to call on DOF. This is another topic that I want to talk to DOF about, no? And we'll transition to that. Your study on the pickup trucks.
Mr. Chair, we would like to clarify that the single cab, the single chassis will still be exempted from the excise tax. And typically, ito po mga single chassis po yung ginagamit talaga for agriculture. So that, therefore, our proposal is basically exempted pa rin po yung mga single chassis.
What will be the type that will be imposed?
All others.
All others. Okay. Ano ba yung all others? I'm not an expert in Ford Ranger yan.
Sir, yan, ito yung Toyota Hilux.
Okay,
Ford
mga
Ranger.
sinabi ni
Yes.
attorney lahat yan. Ano yung single chassis? What is a single chassis? Do you have any
Yung
example or picture?
saan?
Per the NRC, Section 20.
Sir, per the NIRC Section 149, letter E, single cab chassis shall mean a motor vehicle with complete engine powertrain and chassis equipped with a cab that has a maximum of 2 doors and only 1 row of seats.
Para multi-cab yan eh. Tama? I think that's a multi-cab.
Pwedeng,
Bed or yun.
so, meron po kasi mga pickup na 1 row lang siya, tapos yung ano na.
Okay. All right. Sige, my staff, can you get a picture on the single chassis and they will flash it. So what's the same question, no? The allegation is pickup trucks are no longer being used for agriculture as intended to be. And do you have data to prove that?
Sir, we are actually coordinating
You
with
said-
DTI for this. The proposal actually came from DTI themselves. So maybe we can ano po, invite DTI.
Is DTI here, ComSec?
Mr. Chair, we are a DTI attached agency.
Uh-uh.
So we can message them, we can give them the message. Yeah.
But DOF, since you are the one proposing this, please liaise with DTI, get the data and study this carefully. Like I said, once you've given this, it's very hard to take back unless we justify it thoroughly and in detail. So the argument that I've been reading in the internet that pickup trucks are no longer being used for the agri sector. No? So I want to focus on that. No? But you have to show us evidence that it's being used somewhere else, no? For passenger, for non-agri, and so on. No? Because that's really the primary reason why we exempted that under train, no? In support to the agri sector.
This is noted, Mr. Chair.
Okay. Thank you. We call on BSP, Ms. Astorga. Any comments?
Good morning, good afternoon, Mr. Chair. On behalf of the BSP team, we submitted a position paper in October 2022 on the BSP support for the objectives of Tax Reform Package 4. And we also noted there that the complicated tax structure may lead to arbitrage and distortion in investment decisions. So we recognize the potential of the proposed reforms to ease intermediation, improve compliance, and promote competitiveness. Our position paper included specific comments on certain definitions, stated our general support for the equalization, standardization, and rationalization of taxes, and the request for reconsideration on the repeal of exemption for specific supervised entities. That said, we intend to review our comments in line with more recent developments and the discussions today. And we shall submit our updated comments as soon as these are finalized and cleared by our principals.
There's a common, throughout the hearing today, there's a common comment on removing the exemption or harmonizing the tax rate for interest income, including long maturities, no, long tenor. And what do you think of that? No, because that's also earlier on I heard a member from the Thrift Bank Association that retirees are the ones taking advantage or enjoying this exemption. So, what is BSP's view on that particular removal of exemption from long maturities?
Um, Mr. Chair, our initial comment on the equalization is that we generally support equalization as we think it will promote development of short, medium, and long tenor products, which will ultimately redound to a deeper and more robust capital market. That said, we will also review this comment in line with the discussions today. We will see what data we can find that will provide more inputs on that item.
Thank you. Please study that very carefully. And because the points made by our stakeholders and resource persons from the banking industry is valid. No? So I want to see the analysis of BSP on that particular proposal. No?
We will do, Mr. Chair.
We call on NEDA, ASEC Cancio.
Thank you, Mr. Chair. I understand there were some data requested during the previous hearing. So we've collected some of them. I don't know if we can show them on the screen, but just very quickly to summarize, from the studies we've reviewed, there are indications that these financial transaction taxes, stock transaction taxes, do tend to have an impact on the volume of transactions in our in the financial markets. So these were studies in other countries, Mr. Chair. For the Philippines, additional information to what was shown by DOF earlier. Sorry, if you can move to the next slides. So I'm just going quickly through the first three slides. As I said, the summary is that they do have an impact. No? That's what they've found. For the Philippines, we have been, based on the data of the IMF and the Financial Market Development Index that they put together to measure depth of our market and comparison to other countries, there's been an improvement over time, but we have been falling behind. I think you can see it more clearly in the next slide. You can go to the next slide, the chart. So you'll see in this chart, Mr. Chair, the blue line is the Philippines, and in 1995, we were still in the middle, even just second to, I think that's Singapore and Malaysia, if I'm not mistaken. But by 2021, we're only ahead of Indonesia and Vietnam. So we've fallen behind, and the other markets have developed much more quickly. Next slide. In terms of efficiency, more or less the same story, Mr. Chair. We have fallen behind the other markets. We are now at the bottom of the list with respect to the countries that are on the slide. No? For the overall economic impact, we'd like to request for additional time. Our principals would like to take into account the changes that will be proposed by DOF in our analysis, Mr. Chair. Thank you.
This shows the need, no, for this bill. When you talk about financial markets efficiency, as well as the depth of our financial markets. But what I want to discuss, USEC or ASEC, is their overall contribution to our economy. Because aside from simplification, we're looking at contribution to our economic growth by the different financial sectors. No? You have the insurance sector here, you have the banking sector here, you have the equities and debt markets are also here. So how does it contribute, no? In terms of value added or contribution to our economy? That's what I wanted to capture in this hearing. So that when we present this to the body, because I have to present it to the body, I should be able to clearly make the other senators understand that the reduction in potential reduction in revenue can contribute, can be offset by the contribution to our overall growth of our economy. That's what I wanted to demonstrate. Do you have that simulation right
Not
now?
yet, Mr. Chair, but that's what we will include in our submission, Mr. Chair, once DOF provides the updated proposal from your side.
But let's DOF and NEDA please work together on this, no? Because this is a tax measure, and I know the appetite of our senators when it comes to tax measures, no? So I want to cover all bases, not only the particulars of the measure, but the macroeconomic situation, the macroeconomic view. I need to present it very clearly to the floor, no?
Yes, Mr. Chair, actually during our last ETB meeting, we suggested from NEDA their assistance to help us with the macro impact of ease of paying taxes and package 4.
All right.
We just need to finalize the version so that we can submit it to NEDA for their simulation.
Okay. We have also another resource person from the Insurance Commission, Attorney Brian Sibuyan. Comment, Attorney
Good
Brian.
afternoon, Mr. Chair.
Yeah, go ahead.
As a matter of fact, the IC fully supports the proposed measure as submitted by the Department of Finance. Nonetheless, I think there are two major provisions which the IC duly noted in its position paper. And these are first, the provision seeking to amend Section 37 of the law, which is to include all of its regulated entities, wherein it shall now mention the health maintenance organizations as one of the entities entitled to avail of this special deduction. And the other being the proposal to amend the definitions specifically on collective investment schemes. I think this is well argued matter insofar as the CIS bill is concerned. The IC supports the proposal to have CIS instruments tax similarly insofar as VUL is concerned. But we would like to make a reservation that these VUL products will only be included as part of this CIS definition insofar as tax purposes are concerned. But our position would still remain the same insofar as the collective investment scheme bill insofar as VUL products, sir. That would be all for now, sir.
And also, we have another resource person from the SEC, Attorney Arugay, Glory Grace Arugay.
Good afternoon, sir. Vicente Piñamora
Vicente
from the
Piñamora.
Office of the General Counsel, SEC. So with me is Attorney Manuel Galora of Corporate Governance and Finance Department, and Attorney Glory Grace Arugay from Market Securities and Regulation Department. So, Mr. Chair, I would like to manifest that the SEC submitted a position paper dated October 24, 2022 to PLLO and the DOF, as we believe for purposes of consolidation of different entities under the DOF family. Upon reading of the Senate version, we find no substantial difference to House Bill number 4339. Thus, we adopt, Your Honor, our position paper dated 24/2022. That's what be all, Mr. Chair. Thank you.
Thank you for that to the SEC. I have another question for the DOF, and there's also a a proposal to include an automatic exchange of information, no? And um, this is a concept that is present in the House version. And can I request the DOF to elaborate on this proposal and how this proposal can improve tax administration and also enforcement? No, this is basically an enforcement mechanism. No?
Sir, we'll just share the presentation. Sir,
Go
while
ahead.
waiting, can I respond to some of the...
Go ahead, Yusek.
So-
And then, Comsec, can we prepare the automatic exchange of information presentation?
Okay, sir, for Mr. Chair, for the request in terms of total cost of trading of stocks, basically the tax component, it's around 1.2% of the total cost. And out of that 1.2%, 0.6 is actually coming from STT, which is basically 50%. And the other 50% is from the DSTA plus fees. So the main component, the main cost is actually STT, which in this version of the package 4, we're trying to decrease it to 0.1%. Now, sir, for the long-term deposits, out of the 101.6 million accounts, only 0.13% is yung more than 5 years. And then for the senior citizens, basically above 60, those with general savings, only around 37% of the above 60. And
37% is above 60.
yes, have general savings account.
That's a significant number.
Yes. And then, sir, for the comments from our colleagues from the cooperative and the microfinance, in the DOF version, both are not covered. So they're still exempted. And then for the VAT treatment of the real property insurance, we will retain it as VAT. We know the concern of if we transfer them to premium tax, they will not be able to get their input VAT. And then for their insurance premium, they're recommending that there should be no VAT if this is reinsurance. The current system po, they're already exempted. I think the provision there is for monitoring and checking of BIR. And then for the PCSO, according to the literature, the demand for gambling is inelastic. And then for PEZA, sir, we note that if the RBE is under the GIE, it's already in lieu of all taxes. So wala na po dapat silang babayar na BPRT. However, if they're under the income tax holiday regime, they will have, if we remove their exemption, they will have to pay the BPRT.
Many corporations are under the income tax regime already. Do we have that number?
So we don't have that number yet, but we'll submit
yeah.
it to you. And that's it, sir.
So we go to automatic exchange of information. Can you elaborate on this concept and how this concept will help in administration and enforcement of taxes?
Good afternoon, Your Honor. So one key feature of the PFITA bill is the amendments to Section 6F of the Tax Code, which provides for the automatic exchange of financial account information in tax matters. So automatic exchange of information.
The attorney.
Yes, sir.
There's still there. Okay.
So second slide, please. Primarily, AEOI is an internationally agreed tax standard that involves the systematic and periodic transmission of bulk taxpayer information by a source country to the residence country concerning various categories of income reported to governments by financial institutions and covering accounts held by individuals and entities, including trusts and foundations. So being a crucial tool against cross-border tax evasion, especially with a globalized and digitalized economy, Asian economies, as well as G20 and other developing and developed countries, have already signed up to do this. In the ASEAN, only the Philippines, Vietnam, Cambodia, and Laos are not doing AEOI. So the message is clear among jurisdictions that for tax purposes, there really is no more bank secrecy in the world. So how does this pan out? Next slide, please. So this diagram shows how the exchanges shall be made. Financial institutions in jurisdiction A will report all accounts held by the residents of jurisdiction B to the competent authority of jurisdiction A. The competent authority then exchanges this information with the competent authority of country B. So a little bit of a background. In 2009, we were blacklisted by the OECD and actually graylisted by EU countries, France and Italy, when because we were not compliant with the exchange of information standards back then, which was exchange of information on request. So as a reaction to this, we passed the RA 10021, or the EOI on Tax Matters Act in 2010. Ever since, we have been exchanging taxpayer information upon request of our treaty partners, and for the last rating periods, we have been graded largely compliant. So for the automatic exchange of information, the AEOI legislation is currently included in PIFITA. So we have been coordinating with the Global Forum Secretariat and getting technical assistance from ADB on the draft legal framework. So in the last Global Forum meeting last November, we have been asked by the Global Forum to already commit to an first exchange date for AEOI. However, we have to excuse ourselves because we do not have a legal framework to do this yet. So the proposal to Section 6F basically is to allow automatic exchange of tax information, financial account information of residents of other countries, and to allow us to access, especially bank account information. So since its implementation, next slide, please. The next one. Okay, so since its implementation, jurisdictions all over the world have collected around 114 billion euros in taxes, so around 6.8 trillion pesos. Among the 11 Asian members of the Global Forum, around 20.1 billion euros, next slide please, have been collected in taxes, interest, penalties through EOI on request and automatic exchange of information since 2009. So for AEOI, we have been actively pushing for the passage of AEOI in PIFITA. It was actually included also in TRAIN and CREATE, but because of some issues or misunderstanding in its application, it never passed. So pending the bill, we are working with the BIR and our partners to ensure BIR's readiness to implement this. The resources required, the admin and IT infrastructure, and confidentiality of the data safeguards are a priority when it comes to AEOI. So we really have to ensure that when we have the law, we are already ready to implement. That's basically it, sir.
Thank you, Attorney. First of all, feel free to have your lunch. I forgot to say, it's 1 o'clock already, so we'll have a working lunch. Feel free to have your lunch while we discuss this proposal. I understand there's a law already, as Attorney Asuncion. And what's the difference between this proposal and the law that has been enacted already?
So in 2009, sir, we passed the EOI on Tax Matters Act, but this only covers EOI on request. The new standards require us to automatically exchange bulk information financial account information of residents of another jurisdiction to their competent authority. So right now, this is also actually in our treaties, sir. So Article 26 of most of our double taxation agreements would have the EOI provision. Now, exchange of information is generally allowed, but it will be limited by the the domestic law. So in our instance, the domestic law only allows exchange of information on request, and it doesn't allow automatic exchange of information.
So the on request is limited to certain
A certain
issues,
taxpayer.
certain taxpayer, but that's limited to only taxation.
Yes, sir.
There's no other reason for the request for information. It's only because of taxation.
Yes, sir. This is only for tax purposes. Both AEOI and EOI on request, only for tax purposes.
And what kind of information do they request? The bulk information. This will be This will be automatic. No?
Yes,
What
sir.
information will be automatically shared to other jurisdictions?
So usually it would be bank account information, but also we could ask financial account information like on insurance, other investments of a certain taxpayer. Basically, anything that
But when you say
concerns their
automatic, so even if there's no request, we will send and they will send information.
Yes, sir. We have to comply with.
Yeah, but of certain taxpayers or of all taxpayers?
Of all taxpayers who are residents of a certain jurisdiction, sir. So for example, we will be sending bulk account information of taxpayers of Thailand, for example. All Thailand residents who have bank account information in the Philippines, we would have to send that information to their competent authority, sir.
Okay. And vice versa, I would
Yes,
assume.
sir. We will receive also financial account information on our residents who are in Thailand.
Okay. So it's not going to be bulk information about Filipinos in the Philippines.
No, sir. No.
For example, our taxpayers here in the Philippines, our VAT registered taxpayers, we won't send that information.
No,
We will
sir.
only send information insofar as um, uh, um, uh, foreigners who are here in the residing here in the Philippines.
Yes, sir. So, sir, we have a similar legislation by the United States, which is called FATCA. FATCA is being implemented by our financial institutions presently, and since it was enacted. Basically, all U.S. residents reside in the Philippines, all their bank account information, we send them to the U.S. So,
And we're doing that right now.
yes. So this
Without
isn't-
any request from the US.
No request from the U.S. Yes, sir.
Okay, no request from the US. We're just sending it automatically.
Our financial institutions are sending this information already.
Automatically.
Yes, sir.
Okay. And what's the legal basis for that?
The FATCA law of the United States.
And how are they, but we're not,
Yes.
how are
So-
we covered by that law?
Primarily, our financial institutions are obligated to comply so that sanctions, other charges, and fees will not be imposed on them when they transact with U.S. entities, sir.
Okay. Okay. All right. So there's a penalty.
In a way, yes, sir.
All right. And how many Filipinos are we looking at? Because we're now going to receive information about financial information about our kababayans living abroad. Diba? That's how it works. Eh.
Yes.
So how many Filipinos are we talking about?
As
And
to
what
this-
kind of information? Bank accounts, insurance? So they will send it to us.
Yes, sir.
Okay.
As to the number, sir.
To which agency? To BIR?
The banks in that country would have to submit it to their competent authority, probably their Internal Revenue Bureau, and then that competent authority will send it to the BIR.
To the BIR. So in our case, it will be the BIR who will be the recipient.
Yes, sir.
Okay. Great.
Actually, sir, at this time, there's really no law in the Philippines prohibiting other countries from sharing bank account information of our residents who are living there, who are living abroad. In fact, sir, there were instances where to simulate an AEOI processing of information, Australia sent us bulk information about our residents who are currently were in Australia at that time. So we did this around 2015. We had a pilot project. Basically, we were trying to see how the BIR will process the information. So in other countries, there's really no more bank secrecy when it comes to taxation. So, and in this instance, the bank secrecy is actually being lifted only for residents of other countries. So, basically.
The information about Filipinos living abroad, what is BIR going to look for? Because those informations are sent to us, to the BIR, but what are they looking for? How are they going to process and well, in effect, collect more taxes, hopefully, no? Look for fraud. So how are they going to process that?
So primarily, AEOI information, as in other countries, sir, they're being used for audit and enforcement activities of a revenue agency. So in the instance of the BIR, when they receive AEOI information, it will be useful for their audit. The idea is to once it's received by the national office, it is cascaded to the RDOs or the regions where the taxpayers are registered. And those RDOs will be able to use, discover probably income that has not been reported or other financial accounts that should have been reported to the Philippines but have not been.
Saying there's no law that prohibits them from sending information.
Yes, sir. Yes,
Okay.
sir.
So in other words, in the absence of this law, we can still receive
Receive.
information. We can request.
We can request and they can give us, actually, if they have rules on spontaneous exchange of information.
Okay. All right.
But
And
of course, sir, this is a bilateral obligation. So when they give, of course, it is also, in a sense, we also have to give them back information on their residents.
have that this RA 10023, which is upon request
Yes, sir.
in terms of exchanging information. So why do we need it to make it automatic?
Because automatic exchange of information is the new standard, sir. If we do not comply with it, we might be blacklisted by countries who are implementing AEOI already.
Okay.
Yes, sir.
And there is that threat of
being sanctioned.
being sanctioned. And what are the penalties?
The possible penalties, sir, could be higher interest rates, more
Who will be
regulatory
sanctioned? The
requirements.
Philippines or the banks or
The institutions from the Philippines. So, for example, sir, in 2009, when we were blacklisted by the OECD and gray listed by by Italy and France, there were a list of sanctions being imposed. We can share this with the committee, sir.
but name a few just to put it on record. What are the sanctions?
So, ayun po, the first one, probably the additional higher interest rates, the additional regulatory and financial,
What's the name of that?
additional regulatory requirements. I have this list.
Kasi my thought is we have this 10021 already. So it's already a law and we can exchange upon request. So, and I would assume most countries will probably have this type of law as a starter and just furnish us with the list of countries. And in the past 5 years, how many countries have we requested financial information? And how many countries requested from us?
We will get the information. So submit.
Because my chain of thought is, do we actually need this? Aside from being the new standards, do we need to put this in the law since we have already RA 10021?
We have to, sir, because as it is the new standard, our current law does not meet that standard.
And there's already a formal, is that who's going, is
We
it
are a
EC?
member. We are a member of the Global Forum on Tax Transparency and Exchange of Information. As a member, sir, we have committed to implementing exchange of information and tax transparency standards that are being multilaterally agreed upon by the countries who are members of the Global Forum. It is important for the Philippines to have the legal framework for AEOI because if not, and we do not meet the standards, we might be sanctioned, sir, primarily.
Give me a list of those countries who are members of this global forum on exchanges.
Tax transparency and exchanges of information for tax purposes. Yes, sir. We will.
And then give me a list of sanctions that they can impose on the Philippines and its institutions, primarily the banks, I would assume.
Yes, sir.
And also how it will impact our consumers at the end.
Yes, sir.
If you are
We will.
talking about increase in interest rates or maybe additional fees or higher fees, then I want to see how it will translate into consumer impact.
Yes, sir. Sir, it must be understood that this is similar to the imposition of the FATF
Yeah, I understand.
on money laundering and terrorist financing. So the sanctions that are imposed under the FATF, that could also be the sanctions that will be imposed under
Why is it the same,
blacklisting.
the FATF and this global forum?
All address tax evasion, cross-border terrorist financing. These are all on transparency on financial accounts, sir. So it is similar, although different groups are imposing, or not really imposing, or setting the standards for each of the. For
Okay,
each
but
of
I
these.
want to see documents related to that threat of being sanctioned and the actual and the list of sanctions that they can impose over our financial institutions translated into actual impact to our consumers.
Okay, sir.
I want to see that.
We will submit.
Again, things like this needs to be justified thoroughly, so I want to look at those documents.
Okay, sir.
All right. Any more comments from our resource persons?
Revised data request.
If not, we still have a lot of pending items that I need to put on record. No? And number one will be again, I'll go back to the issue of pickup trucks. This is a sensitive issue, and I want to make sure that the records capture the discussion on this pickup trucks. We also discussed earlier impact to the economy. NEDA is still in the process of gathering information and analyzing how PIFITA, through its harmonization of tax rates, can create value to our economy. And then the change in market behavior / growing the market different financial sector, for example, the debt market, the equity market, insurance, and so on. How will how can PIFITA increase the market size and hopefully also increase the tax take from that increase of market size? So I also want to understand that and demonstrate that it's not only reduction of taxes, but we're also improving the sector by enlarging the market of that sector. So those are the things that are still pending that we need to discuss. But for now, we'll suspend the hearing, and we'll wait for the position papers of those three pending items from DOF. And let me request from DOF to already liaise with DTI, with NEDA, and with the other agencies so that we only talk to one agency in relation to all of those requests. So just to reiterate, we have some list of items that we want the agencies and the other resource persons to submit to us. From the DOF, complete data used in deriving the revenue estimates. For example, including data derived from the BSP deposits and savings. Number two, estimated revenue intake upon repeal of the exemptions. Also, the data to be used in deriving these estimates should be furnished to the committee. List of sanctions to be imposed by foreign economies. These are in relation to the automatic exchange of information. List of countries who are members of the Global Forum on Free Exchange of Financial Information. To the NTRC tax component of the total amount of investment, just the tax component. Now, for example, if you transact, if you sell shares of stock, how much is the tax component to the total cost of the transaction? To the Philippine Insurers and Reinsurance Association, simulation on how the removal of VAT and the imposition of the premium tax will affect the penetration and size of the insurance industry. To the Fund Managers Association of the Philippines, simulation on how the reduction of DST and STT will improve liquidity, uptake of equities market, and market sentiments. To NHA, simulation on the effect of the repealed exemptions on housing prices. Andito pa ba si NHA? This is very important. I'm also very sensitive to the production of housing in our country, considering that there are close to about 4 million in terms of backlog. To the PCSO, simulation on the possible decrease in sales due to passed on DST. To PNR, simulation on how the repeal exemptions will affect the consumers. To PEZA, amount of branch profit remittance taxes which are exempted. To CAMPI, I think I mentioned this to attorney, data on the use of pickup trucks. And then number two, simulation on the projected reduction in volume of sales due to imposition of excise tax on pickup trucks. To PCC, Rebap, Laguna Lake, your position paper, and to NEDA, the contribution to our economy. So these are the requests from our resource persons. If you can see, we're trying to cover as many as possible, go as detailed as possible, because the appetite to this type of proposals, especially taxation, is quite sensitive. So I want to make sure that I have all the details covered. So for now, we'll suspend the hearing, and we'll advise you if we will have another hearing. We'll take a look at your position paper if that is already sufficient to address all the requests. If not, we'll have one more hearing before the technical working group. So with that, again, thank you very much for your time and your openness to share with us your opinions and your comments. You can send us your position paper again after this hearing, and then we'll take a look at that. So this hearing is hereby suspended. Thank you very much to everyone.